Good morning, everybody. Welcome back to another episode of the Market Open. I am sorry I am late today. I had to finish up a couple things this morning, a couple things with my mom this morning as well. She was going back to work. She was actually home for the past couple days, her and my sister, for Veterans Day, for the long weekend. So I had to finish up a couple things this morning with them, but we are back. We're going to get started real quick with the Vlad interview on CNBC. I didn't even realize he was live on television, but let's get into that real quick. And then we got Shopify earnings and a lot of other stuff to get into. So let me put that up real quick, and then we will get started. Here we go.
Administration, which has stated that they wish to.
Who I think is trying to make sense of this. What under President-elect Trump we're going to see in the form of regulation that would result in prices like this and possibly even higher if you believe that's where this is all headed?
Hey, good to see you guys. Yeah, I mean, we have seen basically what people are calling the Trump pump. So there's widespread optimism that the Trump administration, which has stated that they wish to embrace cryptocurrencies and make America the center of cryptocurrency innovation worldwide, is going to have a much more forward-looking policy towards this new industry. And I think what you're seeing is the market reacting to that.
But how does that manifest itself? What does that actually look like in reality?
Well, I think the hope is for, first of all, the approach that the SEC has taken over the past 4 years, which has been regulation by enforcement, not providing clear rules of the road for companies engaging in this new industry, and in fact, just pursuing enforcement cases, essentially trying to stifle innovation, trying to stop these companies from operating in the U.S. That's pushed a lot of the really interesting innovation offshore, which I think has been unfortunate. So I think the idea is that we would see that stopping and hopefully some legislation. And now that Republicans have control over not just the executive branch, but Congress as well, that innovation might actually come through.
And is that innovation, you think, related? I mean, we keep looking at Bitcoin as sort of a proxy for all of this, but I would think the true beneficiaries of this should be just about all of the other cryptocurrencies, if you will, and some of the other crypto efforts, given that they're the ones that may turn out to be true currencies that you might use to buy a coffee, given that I'm not sure you're going to buy a coffee with Bitcoin, but maybe I'm wrong.
I think that the potential is much more broad than that. I think that, traders have viewed cryptocurrencies as an asset to trade and a volatile asset. But if you look overseas, you're starting to see the hints of cryptocurrencies and the traditional financial system merge. So stablecoin adoption abroad has overtaken Visa by some measures as sort of like the largest contributor to the blockchain transaction volumes. So you're starting to see stablecoins take off, and those are going to continue to develop and evolve and become more useful. Tokenization, which up until very recently, I don't think seemed feasible in the US. I think now we can start having that conversation because, Robinhood operates scaled businesses in both traditional finance with our equities and securities business and also cryptocurrencies. And we can see directly the benefits of this new technology because the cost savings and the efficiency and the value to customers in the form of user experience improvements like fractionalization and 24-hour trading is just undeniable. I mean, it costs us roughly an order of magnitude less to operate a cryptocurrency business and offer the exchange of assets than it does on the TradFi side. So I think that advantage is undeniable.
So we're seeing your stock, by the way, trading at about 32.20 now. How much do you think the run in your stock is a function of just more trading in crypto and more trading in the markets broadly versus, I don't know, when you start to think about tokenization, some of the other businesses that you might ultimately be able to go in, frankly, if all of this works out in your favor?
Yeah, I think, the stock price is nice and everything, but it's a lagging indicator of all of the work that we've been putting in over the past few years to get to this position. I mean, just looking back in the past month, we had a big event in Miami, the Hood Summit. I think I spoke to you guys in the morning of that event. We announced 3 awesome new products, a new Pro Trader web platform, futures, index options trading. Then a week before the election, we rolled out another new product, presidential election contracts, allowing our traders to trade on the outcome of the election. That was incredibly successful. That traded over 500 million contracts in roughly a week. And you saw Robinhood kind of climbing the App Store charts over the past few weeks. Now we're the #1 finance app in the US. And so I think that it's a combination of innovation across a couple of different products and sectors. Of course, people are trading crypto, but they like our traditional equities offerings as well. You mentioned at the beginning, overnight trading on election night was the biggest in our history. Sunday night as well, just a couple of nights ago, was the 3rd biggest overnight session we've had. So it's pretty amazing, I think, for me, because I remember the 2016 election. Robinhood was a young company, and our traders, our investors, couldn't actually respond or take advantage of the election price moves. It was just in the futures markets. And now we've got 4 assets that allow investors to capitalize on that activity round the clock. You've got futures. You also have 24-hour equity markets, cryptocurrencies, and presidential election markets. So I think the amount of innovation that we've delivered to retail, sometimes, it's hard to comprehend, but we're also not done. I think there's a lot more work to do, and we're working our way there.
Hey, Vlad, I was going to ask you about that. I mean, you're hinting at it, just the idea that you're the #1 finance app that's being downloaded right now. But it's only been a week. We have seen a lot of action in the stock market, though. The most recent numbers I've seen was that you had 24.3 million funded customers and 11 million monthly active users. Did either of those numbers go up in the last week?
We haven't announced them, but certainly we've been seeing increases in activity and increases in trading volume across all assets. I mean, I mentioned earlier, just Sunday was our 3rd biggest overnight equity trading volume, and the biggest was election night. So it's been a busy November. October was also a strong month. We released those results yesterday, and we had over 5 billion of net deposits into the platform in October. So that was also an incredibly strong month for us.
Do you imagine getting into other types of contracts and the like? I mean, the sort of poly market of it all, being able to bet on anything. Is it just elections that are interesting to you? Do you think you could open it up to other things? I mean, you could bet on whether Joe's going to wear a blue or red tie tomorrow. I don't know. I mean, that's where this could all head in the end, right?
Yeah, one of our most requested markets. That one. Yeah. I think it's a new.
You can tell me what to do, and
that's the other.
We'll lay a big off.
By the way, that's one of the things, that we should talk about, though, which is there's a real issue. The elections are one thing, which it's hard to necessarily know what's going to happen, but there's other things where we always talk about the potential for inside information and the like. You can get into, with sports or just all sorts of things where it gets a little bit more complicated, or a lot more complicated, a lot more quickly. No.
Well, I mean, here's what I'd say. I think that this is a regulated space in the U.S., regulated by the CFTC. And I think in contrast to some of the other competitors that you mentioned who are offshore, can't operate in the U.S., the rules are a little bit more clear and strict. And I think customers and market participants want that. We've got experience working in a regulated space across all of our offerings. And I think it's clear that for hedging risk and for speculation and just as a source of information, prediction markets are really important and critical. And so I think it's important for a regulated player to offer them to customers.
Here's a prediction market question. We all say the prediction market's got it right. Everybody says that. But then when you actually drill down and look into it, you realize that that the prediction market was right about the Electoral College. True. But wrong about the popular vote, for example. So this whole sort of concept that, prediction markets are right and polls and everything else are wrong. How do you think about that?
I think that, obviously the further you get away from the event, the more uncertainty there is. There's uncertainty in the polls, there's uncertainty in the markets. That's why there is a market. I mean, there's some people that are speculating and hedging on events going in both directions. But I think what you saw on election night is, the states weren't called until very, very late into the morning. And the prediction markets showed a fairly clear result earlier on. So, I mean, if on a prediction market, it's, 95% or 99%, there is a chance that it goes the other way, but it's like pretty clear.
Right.
And I think the news has turned into sort of like this entertainment. There's this entertainment quality where it's kind of in their interest to create suspense rather than just tell you what's actually happening. And so I think that's where the power is actually revealed. When information is coming in, you can see the markets process that relatively quickly, but the big networks were there saying, oh, it's very unclear. We might not know the result for several days.
And Vlad, even the popular vote was in the right, like it had sweep.
All right, so that was Vlad on CNBC. Thank you, everybody, for being here this morning. We've got a lot to talk about. I am just finding out that Bitcoin hit 90,000 overnight. I did not see that. Bitcoin did indeed hit 90,000 overnight. However, Bitcoin's taken a little bit of a pullback. By the way, Derek, thank you again for the 20 gifted membership. 20 of you guys have now become members again. Thank you, Derek, for those gifted memberships. Bitcoin's taking a little bit of a pullback, and it's taken the rest of the market down with it. Palantir down 2.34%. Alibaba down 3%. Tesla down 2.6%. Rocket Lab down 2%. Bitcoin did hit 90,000 at one point, 90,050. Now down to 86,464, down 2.3%. Robinhood, because Bitcoin's pulling back, is taking a little bit of a pullback, down 3.2%. We'll talk about the Robinhood October metrics. They were absolutely incredible. And it does look like Q4 is going to be very strong for Robinhood. But Robinhood right here down about 3.2%. S&P 500 relatively flat on the day. And Marathon's down 3%. CleanSpark's down 5%. Coinbase is down 3%. MicroStrategy's down 1%. SOFI is down 4%. So all of the big names that were crypto proxies, or in general, companies like Rocket Lab, SoFi, that have had a pretty nice run over the past 2 weeks, Tesla included, they're taking a little bit of a pullback. I think this is healthy. I think this is very healthy. It's basically been 2 weeks of nonstop price action movement to the upside, and not just like movement to the upside, but like violent movement to the upside as well. And so because all this movement has been pretty violent, as we've seen some of these stocks continue to gain momentum, I think a little bit of a pullback, a little bit of just chilling back and forth is not a bad thing. I don't know if it's like a necessarily buy the dip, even though in this type of market, it seems like any pullback is a buy the dip. But I do think it is really healthy for some of these stocks to consolidate. Robinhood even pulling back to $28, $29 and consolidating. I would love to see it hold 30. That would be awesome. I think, that's not a bad thing. Same thing with Palantir. So Palantir, we're right here at 58.75. We did touch 62 yesterday. If that were to pull back to like 55 and consolidate in the 55 to 60 range, I don't think that's the worst thing ever at all. And then same thing with Tesla. Tesla broke almost 360 yesterday. Overnight, it actually broke 365 on overnight trading. I don't know why it went up another 4% last night, but it did. Now it's down right here at 339. If that consolidates back into the 330s to the 340s, I don't think that's a big deal either for Palantir. So, and for Tesla. So it makes a lot of sense to see a little bit of this pullback. And I think we were overdue for volatility to the downside. And as Bitcoin goes down, it seems like that volatility is likely here. Now, the question is, how long does it last? And I don't know if it's going to last as long as some people might hope it lasts, given there are dip buyers ready at every level to try to buy in this market. Shout out to Chad. Good morning. Morning, Amit. Do you know that you can build with AIP? Yes, Chad. I know that I can build with AIP. I think Chad had that tweet this morning. Chad, I think that should be your like go-to phrase at this point. You can just build with AIP. I like that. You can just build with AIP. Whenever someone asks you like a difficult question, you can just build with AIP. That's how you would respond to them. Shout out to Chad again. He did turn 40 on Sunday. So big 40 to Chad. Happy birthday to him. And thank you for being here as well. Doug says some measured retracements are healthy, as most of us can agree with. The crazy highs cause some of the most mental distress, and this lets the pressure off of everyone. Yeah, for everyone who's feeling anxiety over the past couple of days that things were getting too high, things were getting too hot, should you take some profits? A little bit of a pullback, I think, is very healthy in this market before we try to make the next leg higher as well. Shopify. Let's talk about Shopify. So I have a lot of stuff I want to talk about based on different things that happened last night. A lot of stuff that has to do with Bitcoin, BlackRock's ETF, MicroStrategy, etc. But let's talk about Shopify, because Shopify is absolutely exploding right now. And someone in the chat mentioned it. I even forgot I had this thesis. So Tejas in the chat said, I bought Shopify because of a thesis that you had a couple weeks ago, which was that UPS having good earnings would be good for Shopify. I forgot I even said that, but now that Shopify is up 20%, yeah, it makes a lot of sense. UPS absolutely crushed earnings. I think it was 3 weeks ago, if I'm not wrong. Maybe it was a month ago. And if UPS is in the business of sending packages, Shopify is in the business of people buying things online and then sellers having to ship those packages. So UPS's volumes was indicative of the fact that it looks like e-commerce activity is probably going higher. Shopify's up 21% right now. 21%. Obviously, they crushed their numbers and people are continuing to buy things. Revenue, $2.16 billion. GMV, $69.7 billion. Monthly recurring revenue, $175 million. And they see Q4 revenue growing at mid to high 20s in terms of percentage points, which is incredible because you've got Cyber Monday and Black Friday coming up. So here's what the CEO says, or the president of Shopify. Q3 was outstanding, further establishing Shopify as a leader in powering commerce anywhere, anytime. Our unified commerce platform is becoming the go-to choice for merchants of all sizes. As the busiest shopping season of the year for all of our merchant approaches, they trust Shopify to provide them tools, unmatched speed, and reliability to maximize their success. CFO says Shopify achieved 26% revenue growth and 19% free cash flow margins this quarter, marking our 6th consecutive quarter of greater than 25% revenue, excluding logistics. That is crazy, bro. 6th consecutive quarter of compounding at 25% revenue growth. That is not easy. That is not easy at all. Put in the chat if you own Shopify. I mean, this is just one of those, as TJ calls them, swan companies. Sleep well at night. You know Shopify is going to be around forever, and you can sleep well at night knowing that they're compounding revenues at 25%. Moreover, we have grown free cash flow margins sequentially each quarter this year, consistent with what we delivered last year. These results demonstrate the durability of our business, our multiple avenues for growth, and our continued discipline of balancing both future growth, investment, and operational leverage. Now, even if you don't own Shopify, why is this so bullish for the broader economy? Well, people are spending. Remember 5 months ago, the big concern was, what is the state of the consumer? Every analyst was like, consumer. Every earnings call, we were looking for that sentence where they talked about the consumer. The consumer seems to be in a hell of a situation where they can actually spend and where they can actually buy stuff. If Shopify is compounding at 25% and they have the operational leverage to increase their free cash flow margins over the past 5 quarters, to me, it means that the business itself is becoming more efficient, which is good for investors. But if you're looking at it from an economic perspective, it means people have money to spend. And if people have money to spend and they're willing to buy things on Shopify, which, by the way, many times are overpriced compared to the same items you could get on Amazon that you could get in a quicker shipping time, but Shopify has, a brand associated with it, and that's how you end up finding the store. You might want to support a creator. It just means that there's some excess money out there, which is not bad as well. We also have Tyson earnings. I'm looking at these numbers right now. Tyson, a beat on the top and the bottom. Tyson 0.92 versus 0.69 on EPS. 13.5 billion versus 13.4 on revenue. Tyson stock is up 6%. So people are eating chicken and all the other types of food that Tyson sells. And you got Tyson having some decent earnings as well. A decent amount of you have Shopify in the chat. John has 220 shares. Imad has Shopify. Maxime has 75 shares. Bob says that you own 20,000 worth of it. Greg has some Shopify. Yeah, it looks like a lot of you have some Shopify. Krupa has Shopify. Alex has Shopify. It's a sleep at well at night company. And the problem is in 2021, they got really valued at a high. I mean, Kathy Wood was buying this sucker at 175 and it crashed all the way back down to 30. And I think she started selling out of it. I think she still has a decent amount, but it got overvalued in 2021 with the rest of the market. But they went through a couple years of pain and now they're getting their stuff back together. And you've got Black Friday and Cyber Monday coming up, which usually Shopify compounds at a ridiculous level every year, at least 20% off of a high base, off of a $2-3 billion base every year. And the other thing about Shopify is during Black Friday, Cyber Monday, they have that interactive website. and you can go to it and literally like see how many orders are being done at the same time. I forgot the name of the website, but it usually goes live during Black Friday, and you can literally see billions of orders being passed on this like spinning globe that they create. I remember they made this thing 5 years ago, and it was the coolest thing ever. And it looks like that's not slowing down this year when it comes to that momentum. Rocket Lab will be out after hours. Rocket Lab will be after hours, so we'll cover Rocket Lab, Spotify, Kava, a bunch of companies after hours today. Shopify was the big one this morning. As Chad says, Tyson is a customer of ours, so Tyson having some good earnings. Hopefully that is also being due to the fact that Palantir has invested in their digital transformation. So you got Tyson right here with a beat on the top and the bottom line. Also, we had Home Depot. So let's take a look at Home Depot. Home Depot, again, another indication that the consumer is willing to spend. Home Depot, 367 versus 365 on EPS. That's a beat. And a revenue 40.2 versus 39.2. That is an $800 million, basically $1 billion beat on revenue. Home Depot stock is currently up 1.5%. These are signs of a healthy economy, man. These are signs. Home Depot and Shopify actually putting up some good numbers means people are spending. They have excess income. They're willing to spend. We have to monitor inflation within all of that spending that's happening. And tomorrow we're going to get CPI numbers, which are going to be very important. But with oil prices down at $68, you would imagine that inflation starts to get some downside just from energy alone, if not shelter. And that should be good. We have increased growth and hopefully decreased inflation, which is going to be very strong. What Twitter account is this? I'll put it in the chat. This is actually a really good Twitter account that is updated with the numbers as soon as earnings come out. So you can check out this Twitter account right here. Okay, cool. So Shopify crushed, Home Depot crushed, Tyson crushed, and that is the majority of the earnings that we have this morning. Now, quickly, let's touch on Robinhood. We'll talk about them a little bit later as well, but just to touch on what Vlad said in that interview, here are their October metrics. They crushed. They crushed, folks. And so if the stock's going down today because Bitcoin's down like 3%, I think that's totally normal. The stock went up to 34 mainly because Bitcoin went up yesterday. So that is a very healthy breather. But in terms of the actual numbers, 90,000 new accounts, 5.2 billion in deposits. That's the highest they've had all year. $1 billion added to cash sweep balances. So now Robinhood users have about 25.5 billion in cash. They added 7 billion in assets under custody. They have about now 159.7 billion. 126 billion equity trading volumes. That's the highest in over 3 years. 158 million option contracts traded. That's the second highest month this year. 5.6 billion in crypto trading volumes. That's way better than the monthly average they had in Q3. And then 700 million increase in margin balances. Now they have $6.2 billion of margin. As you can see in August and September, that number was 5.5. So that's a big jump, about 12.9% month over month. And their margin book is increasing. Robinhood makes a decent amount of money in terms of their take rate from margin. So the margin book going up just means they have a better chance to make a lot more revenue off margin alone. So exceptional quarter on trading volumes. You got crypto in November that has exploded to all-time highs. You got Dogecoin that's at 40 freaking cents. Most people buy Dogecoin on Robinhood. Robinhood has the largest share of wallet addresses when it comes to Bitcoin. So if October was good, we still have some time before November plays out, but November, the market's hitting all-time high and crypto's hitting all-time highs. You could imagine that November potentially is just as good, if not better, than October. And if that's the case, you're setting yourself up for a really strong Q4. So to me, this is why the dip makes sense to buy. The dip doesn't make sense to buy just because you want to get more exposure to Robinhood. You're looking at these Q4 results. These Q4 results are looking like they're going to set themselves up for a 40% growth quarter. And that's why it makes sense to buy the dip. Now, granted, if Bitcoin pulls a little bit of a rug on us and Bitcoin falls back to 70K, I think Robinhood's probably back to 25, right? Because a lot of this run has been because of Bitcoin's momentum. And that's the same for MicroStrategy, Coinbase, et cetera. Now, again, Robinhood is not solely contingent on Bitcoin. If the markets are up and only Bitcoin goes down, but the broader markets stay afloat, then that Robinhood's going to benefit from that. But yeah, as of now, given how intense Bitcoin is in terms of its volatility, it definitely will impact Robinhood. However, it doesn't look like Bitcoin's necessarily going down to 70,000, which takes us to Bitcoin. Let's talk a little bit about what we saw last night on Bitcoin. So first of all, here are the ETF inflows as of yesterday into all the Bitcoin ETFs. 765 million from BlackRock, 135 million from Fidelity, 42 million from Bitwise, and 108 million from ARK. If you add up all of them together, it was $1.1 billion of net inflows from the ETFs alone when it comes to Bitcoin. So yesterday was a massive day in terms of the volumes that were traded for Bitcoin as well. Now, here are some specific numbers in regards to ETF activity that we had yesterday night. Bitcoin ETFs, MicroStrategy, and Coinbase had $38 billion in trading volumes. IBIT, which is BlackRock's Bitcoin ETF, did $4.5 billion in trading volumes with $1 billion done in the first 35 minutes. And again, it got $765 million of inflows. $53 billion has flowed into ETFs in general, not just Bitcoin ETFs, but ETFs in general since election day. So Obama 2012, Trump 2016, and Biden 2020, the first 3 days after the election, had inflows into ETFs. Trump 2.0 had a record amount of money going into ETFs, 53 billion, the first 3 days after his presidency. So it kind of shows you that the Trump pump, as Vlad called it on CNBC, it seems to be in effect with this much money. I mean, 53 billion in the first 3 days after election day is just insane. Never happened before. And it beats the past three administrations of net ETF inflows. Leveraged ETFs like CoinL, MSTU, NVDL, and TSLL. So leveraged on Coinbase, Tesla, NVIDIA, MicroStrategy did 7 billion in combined trading volumes yesterday. MicroStrategy did 12 billion in trading volumes yesterday alone. And as of 11:30 a.m. yesterday, these were the top 10 traded stocks of the day. Tesla, NVIDIA, Coinbase, MicroStrategy, Salesforce, Apple, Microsoft, Amazon, Meta, and Palantir. I was surprised to see Salesforce and Palantir in that top 10 list, but in that top 10 list are Palantir and Salesforce within the top 10 traded equities as of 11:30 a.m. yesterday. So you are just seeing a ton of momentum across the entire board in terms of people that are getting excited for the equity markets and for people that are putting in some cash, because ultimately they believe that this is a market where it's better to have cash in versus better to have cash on the sidelines. So that is what's leading to Bitcoin's momentum. All the leveraged ETF, all the regular ETFs, all the MicroStrategy, Coinbases of the world that ultimately buy Bitcoin. We did see MicroStrategy bought another 27,000 Bitcoin yesterday. All of that is leading to more momentum. And then this was the funniest thing that I saw yesterday. Bernstein is a $800 billion private wealth management firm. They have $800 billion in AUM. They sent out a note to their clients. The note was one sentence. Here's the sentence. Quote, Bitcoin is at 80K. We'll keep it simple. Don't fight this. Add crypto exposure ASAP. Call us if you need help. That's it. Instead of reading some long equity report about like the nature of crypto, they said, hey, we've been bullish Bitcoin all year. This is the bull market. Don't be scared. Don't fight it. Get exposure ASAP. Call us if you need help. I mean, that to me was just incredible to see that they actually sent out that note to their clients. That was 4 sentences, not one sentence. Yes, correct, David. That was more than one sentence. But those 4 sentences in and of itself is them saying, hey, whatever you need to buy, you should buy. Now, they do have an outperform on MicroStrategy and Hood. So if you're a Bernstein client that like really takes their crypto strategy seriously, Hood and MicroStrategy might be the ways you get exposure. But the fact that they believe that A, Bitcoin's going to be 200,000 by the end of 2025. B, you don't get scared of this bull market. You don't get hesitant. You don't be like, oh, should I sell my Bitcoin now that it's pumping? You embrace it full on. It kind of shows the attitude of some of the firms on Wall Street in terms of what they think is going to happen with Bitcoin and ultimately how they want to navigate currently what's happening right now. So it looks like we're in a pretty exciting market for crypto, and not sure if that's going to change anytime soon with the momentum that we are seeing. Could we get a pullback back into the 70s? Yeah, it's possible. But at this point, a pullback from 90 to 86, I think is like reasonable. It's healthy. And you're going to get a lot of people that are excited to come in. Along with all of that, to top it off, Robinhood is number 1 in the App Store for finance. Coinbase is number 2. And in the entire App Store, Robinhood is number 14. It's underneath McDonald's and above Gmail. It's underneath McDonald's and above Gmail in the entire App Store in the United States. And Coinbase is number 17, below Walmart and above Google Maps. The fact that Hood and Coinbase are taking App Store market share from these household names in the top 15 or the top 20 is just incredible. And it means, in my opinion, that retail is absolutely coming back. And because retail is coming back, you're likely going to see a little bit more momentum for crypto. One headline real quick. I'm just seeing Netflix ad tier surpasses 70 million users, doubling since May. So we got Netflix ad tier doubling since May. And now we have 70 million users that are using Netflix. There you go. So good headline there for Netflix as it surpasses about $800 in terms of stock price. All right. I think we have Brian Armstrong on CNBC as well. Let me see if I can pull that up right here. Because he is the Coinbase CEO, and it would be important to understand kind of how he's thinking of this crypto. So let me see if I can get this right here. I know he was on this morning, so I just have to find the segment and then let's take a listen to him. But in general, again, seeing Robinhood and Coinbase get that app, the last time they were here was March, and I don't even think they broke top 20 in March. I think they were like number 80 in March, 80 and 81. That was like where they peaked at. So this is way different than March. Obviously, Bitcoin is higher than it was in March, but in terms of just retail momentum, it also seems like it's much, much stronger than it was back in that 70,000 run, what we saw in March. Okay, let's see. So we watched Vlad. Okay, here we go. Here's Brian Armstrong. All right, here it is. Let's take a look at this, and then we will be right back.
Election this morning, he's announcing the launch of Coinbase 50 Index, which represents the top 50 digital assets listed on the Coinbase exchange. Good morning to you, Brian. It's great to have you in the broadcast. There's about 100 things I want to ask you, but let's just start with what's happening in crypto post this election. And maybe it's the same question I asked of Vlad earlier. As you sort of look out on the horizon now, given President-elect Trump and his administration and his ambitions and plans, what is it that you see happening exactly?
Yeah, well, good to see you, Andrew. I mean, one of the most exciting things about this new Congress, which is the most pro-crypto Congress ever, is that I think we finally have a chance to get some regulatory clarity in the U.S. about some of these big open issues that, frankly, under Gary Gensler, we just haven't gotten any clarity for a long time. So which of these assets are commodities, which of them are securities? That requires the SEC and the CFTC to come together and collaborate on rulemaking, or to have Congress really step in and pass new legislation. So there's an opportunity to do that. The FIT 21 bill, which passed with strong bipartisan support in the House earlier this year, it's now making its way through the Senate, and with any luck, we'll get that passed through the Senate and make it to the president's desk here, either in the lame duck or early in the Trump administration.
Brian, we've obviously seen Bitcoin move materially, obviously, in the past week, really, even more so, even before that, given sort of the run up and maybe expectation that President Trump was going to win this election. When you think, though, about the other currencies, and they're the ones I would imagine at this point that have the bigger room to move, or no?
Well, I think Bitcoin will be the most important crypto asset for a long time. It's got a lot of runway to move as well. But what's exciting about this Coin 50 index that we launched is that people are increasingly becoming aware that it's not just about Bitcoin. There are dozens, hundreds of different assets in crypto that are now, they've met our listing standards, they've made it onto our exchange. And actually, there's thousands of these being created every day, believe it or not. And so some of these they're coins like Ton and WorldCoin, which are being used in emerging markets. There's things like in the DeFi space, like Uniswap, that people want exposure to, or the things that are layer 2 solutions are being built on top of, like Optimism. I think we're eventually going to get to a world where there's millions of these tokens. Every project, every individual, every meme on the internet is going to have one of these. And of course, every company, when they want to raise money, as we get regulatory clarity around securities, and have a clear path for that, they should be issuing these coins as well. And so increasingly, people are going to want broad market exposure to crypto. It's going to be the next version of the stock market, but it's also the next version of the internet. And so that's why it's so important for us to have launched this canonical market index, Coin 50, for people who want exposure to the broad market of crypto, not just one asset.
And you're now talking about some of these tokens being used for example, IPOs, something that was sort of taken off the table during even the Jay Clayton era when people started to think about using them that way. I mean, that would upend so much of the financial industry, no?
Well, I think it's important that crypto is really just a technology to update the financial system writ large. And one of the areas in the financial system that could be improved dramatically, I think, is capital formation. There's lots of different people, they're trying to build an apartment complex, they're trying to start their next tech startup. They want to raise money from investors. And today there's instances where people are trying to raise money for their real estate project, whatever, and they're paying 11% in financing fees to various organizations to package that together. And so that's just one more area on a long list that crypto could update the financial system. Now, those are going to be securities, right? So we need to have a clear path for people to register crypto securities, There's disclosures to figure out. There's, how do you make sure that these are accredited investors when they need that? And so we, along with the rest of the crypto industry, are working on ways to do that. For the last 4 years, we've been, really the door's just been shut in our face. Any kind of productive conversation about how to make that happen in a trusted and compliant way, they've just been totally unwilling to engage in that conversation. And so it's really the dawn of a new crypto era with this election that just happened, because it's the most pro-crypto Congress ever. We had 268 pro-crypto candidates elected to the House. All 9 new senators that got elected had either an A or a B rating on standwithcrypto.org. And of course, in the White House with President Trump, there's a full-throated endorsement of crypto. And so we couldn't be in a better position to finally get some clarity and start to rebuild the crypto industry in America again.
Brian, I'm curious about what you think of this. There is a perception, I think probably real, that the crypto industry had a huge influence on this election, not just the presidential election, but elections around the country when it comes to Congress and the like. There was huge amounts of money that was spent by members of the crypto community, including yourself. And there's a question about money in politics and whether that influence is a good thing. How do you think about it?
Yeah, so I think there's no question there was a lot of money involved from the crypto industry, and there was also a lot of voters who came together in a grassroots movement. So, we don't set the rules of the game, but that's how the game is played in the United States. And I think it was important for us to show up, defend our customers' rights. But they also showed up as a huge voting bloc. And it's important for the crypto industry to have gotten organized. We helped this by funding groups like standwithcrypto.org, which got to almost 2 million advocates in the United States who raised their hand and said they wanted to elect pro-crypto candidates. We're going to continue to support them after the election. They've taken a stretch goal and said they want to get to 4 million advocates in the U.S. by the 2026 midterms. Even Fairshake, the super PAC that we donated to, they've raised an additional almost 50 million of capital right just since the election, looking forward to the midterms. So, I think it's really important we keep showing up as a crypto industry on these policy issues. It's important for the future of America. And look, in my personal judgment, I would prefer that the government was smaller and there was less ability for people to go in there and influence it. But because we have this big government and that's how the rules have been set, both money and the grassroots movement of voters coming together.
All right, that was Brian Armstrong on CNBC about the momentum in Coinbase. Folks, thank you everybody for being here. It is once again 9:30 a.m. and the stock market on Tuesday, November 12th is open. Wake your ass up. We now see today who buys the dip, because across the board, we are seeing a bit of a pullback. Palantir opens the day $58.93, down 2.1% after going up 47% last week. We are seeing a little bit of a tiny pullback right here, down 2.34% at $59. Robinhood 31.65, down about 3.4% on the day. S&P 500 is relatively flat, but looking like it's going to be green, 0.01%. So just slightly green, but basically flat on the day. Bitcoin just under 86,000. Rocket Lab, they do have earnings today after the bell. Rocket Lab did hit $15 yesterday. Right now, $14.50, down 1.76%. HIMS is down 3% after being up 20% yesterday. Tesla is down 3% after being up 8% yesterday. Tesla here at $340, down about 2.9%. Alibaba's down 2.8%. Enphase continues to go down 1.2% after being down 4% yesterday. SolarEdge down 2.5%. Riot down 7.35%. This is a Bitcoin miner along with Marathon and CleanSpark. Marathon down 6%. CleanSpark down about 8%. Coinbase down 5%. MicroStrategy down 4%. SoFi down 5% as well, 1340. It did hit 1450 yesterday, or 1440. This one is down. CrowdStrike slightly down. Gold is down a little bit today, down about 1/3%. The Qs are flat, but down to 0.09%. IWM is down about 0.5%. MSTX is down 8%. BidX is down 3.4%. Qualcomm's down 1.4%. NVIDIA is green today. Interestingly enough, NVIDIA is actually green. But the rest of the market, Carnival Cruise, Royal Caribbean, Norwegian, all of those are down about 1%. Peloton's down about 2%. Celsius continues to get hit, down 1% on the day. Lemonade down 3%. Starbucks down 0.5%. PayPal down 0.5% or 0.15%. Oklo down 0.25%. Robinhood down 3.4, Palantir down 1.5. Let's look at the Mag 7. We've got red except for Meta. That's green, 1.2. Microsoft's green but flat. Apple is green, up 0.11. Amazon's up 0.28. And NVIDIA's up 1%. So Google and Tesla are down. Amazon, NVIDIA, Apple, and Meta are slightly up on the day, seeing a little bit of the rotation happen from those names. In the semiconductor space, everything is red except NVIDIA. Everything else pretty much is red today. Kind of the same trend we've been seeing. Dell is up a little bit because they're taking away some market share from SMCI. SMCI down another 3% after being down 10% yesterday. So SMCI is down. Where is Shopify? Shopify is up 20%. There you go. $108 for Shopify. Shopify now year to date, I believe it's up a little bit over 20% year to date. 45%, a little bit more than a little bit. Shopify right here, 45% now year to date. Shopify is up. Again, Shopify had incredible earnings, and that's why Shopify is getting the momentum that we are seeing right now, up from about 87 into that 109 range for Shopify. And they got their best quarter coming up with Black Friday and Cyber Monday. So that is coming up very soon for Shopify, which is going to be important as well. So Shopify right there, 108. Shopify is like the only, like there's tech companies in Canada, but Shopify is like the biggest tech company in Canada from my understanding. I have some friends who are Canadian and they say everyone who is really into technology wants to work at Shopify because it's like one of the best places in Canada to work. So it's one of the gems inside of Canada, and it's up 20% today as they have continued to execute. Palantir 59.48. Robinhood, wow, Robinhood right back to 32.33. So Robinhood was down about 4%. Now it's down 1.4%. 32.33 on Robinhood. S&P slightly red. Bitcoin 85,470. Rocket Lab just went green. So I'm curious to see today, how long does it take for people to buy the dip, or do they just continue to sell things off and they say, you know what, I'm going to take a little bit of a break? Or, does Palantir, Palantir is 20 cents away back from 60. Is that really a dip? Palantir was down 3%. Now it's down 0.7%. Kind of doesn't feel like a dip to me. It feels like people are buying at these levels. So it'll be interesting to see over the next couple of hours how the market perceives Palantir. And if it ends up buying the dip. Amazon is green. Taiwan Semi is down 1%. Google just went red. Meta is green today. Meta was red the past couple of days. Square had a big day yesterday. They're green today. They got crushed after earnings. Then they went up 9% yesterday. Bank of America is green. XLF, financial sector, is relatively flat. ELF is down 1.3%. Archer is down 0.67%. They were up 10% yesterday as well. IBIT's down 1.6%. Costco is down 0.25%. There's red in the market, but there's not really like bloody red. It's not like bad red. It's just like, it's red. As FHC says, this ain't no dip. Like, this is not a dip, folks. I think this is one of those days where it's pulling people into the market. If you haven't been invested, this is like making you feel better. Like, instead of buying Palantir at 60, you buy it at 59.59 and you feel better. Like, oh, well, I got a little discount. It's like, that's not a discount, fam. This is just like one of those days where things are taking a little breather. And if money is still flowing in today, well, it means that there is a lot of cash on the sidelines ready to chase. A lot of cash ready to chase right now. Yeah, Palantir crashed 1%. Oh my gosh. Dude, Palantir was at $62 yesterday. It was just insanity, bro. Palantir at one point yesterday was worth more than Lockheed Martin. There was a little bit of a tweet that went viral. Let me show you guys this tweet. Because people, when they saw that Palantir was worth more than Lockheed Martin, they started comparing the numbers. And they were like, wait a second. Does this make a ton of sense? So this was the tweet that went viral yesterday for Palantir. It was just comparing the numbers, and you'll get people who are not interested in Palantir, don't know about Palantir, to look at this stuff and they think a certain way. So Lockheed Martin does $71 billion in revenue, $6.6 billion in earnings, $6.5 billion in free cash flow, $133 billion market cap. Palantir does $2.8 billion in revenue, $476 million in earnings, $980 million in free cash flow, basically $1 billion in free cash flow, market cap $137 billion. So when you look at that, and you know nothing about the companies, you're kind of just like, all right, that's kind of wild. And it is wild. I'm not going to say it's not wild. But, and it's hard to justify it, but you could make an argument that Palantir has better margins. They're obviously growing a lot more than Lockheed Martin at 30%. Lockheed Martin growing at 5%. Lockheed Martin is a manufacturer of hardware. Palantir is a software company, so they can scale in a different way. There's other arguments for how Palantir fits in the broader AI thematic that has had a lot of money fueled into it outside of Lockheed Martin just simply being a defense contractor. But yeah, those numbers, when you look at them like that, are pretty wild. Regardless, the market is choosing to give Palantir this valuation and this market cap. And you got a little bit of a 1% down day for Palantir, but still above a $130 billion market cap. Did Hood just go green? Wow, Hood just went green. Look at that. I mean, look, those October results were incredible. So I would imagine the market gets excited about that outside of whatever is happening to Bitcoin. So Robinhood now going green. Did Coinbase go green? No, Coinbase is still red, but it is having some green candles. MicroStrategy is also red, but having a little bit of a green candle. So again, you're not really seeing a massive dip on any of these names, and it's healthy for them to have a little bit of a retracement, but that retracement's getting eaten up aggressively as people decide they want to get more exposure to these assets. Robinhood right here at 32.89 on the day. Why is Riot down? So remember, all the Bitcoin miners are down because as Bitcoin goes down, their cost of mining, continues to stay the same, which means their profit goes down if Bitcoin goes down. Now, that's like the technical reason they're down, but in general, they're down simply because they traded an alpha against Bitcoin. So Bitcoin's down 3%, Riot's down 8%. That makes sense to me. Yesterday, Bitcoin was up 9% and Riot was up like 17% or something, right? So off big days, if there's a little bit of a retracement in Bitcoin, they're going to have some big declines, but it's offset by the big days that they had the day before when Bitcoin went up. Nvidia's up 1.15%. Yeah, Nvidia had a tough day yesterday. Didn't participate at all. Now Nvidia coming back for revenge. 1.8%. We do have Jensen with earnings next week, November 20th, and Blackwell revenue. The street numbers are 32.5 billion. If they come in at 34 billion, that would be really bullish. We're gonna have to see kind of what numbers they put out, but if they do, that would be pretty incredible. And I think the market's expecting that. I think the market's expecting a lot of growth at a number that's even higher than what the street's expecting, along with guidance. And if so, I think they're ready to take Nvidia past 150. But now it all depends on earnings. Nvidia right here at 148, up about 2% on the day. Meta also getting some love. Meta's trying to make his way back to 600. Meta was at 575 for the majority of the week. Really didn't move after earnings. Square's at 85. That's up 2%. Bank of America's up a little bit. Google's at 182. And then Amazon right here is also at 207 on the day. So Dan Ives just said something. Let's take a look at what Mr. Dan Ives just said. He was on CNBC yesterday talking about Tesla's $1 trillion opportunity. He is very bullish on Trump in the White House for Elon, in terms of Elon just having the ability to get regulation passed quickly, given that he has a friend. So Dan Ives says 2007 investors said Apple was a hardware company when they launched their iPhone and never saw the growth ahead in their spreadsheets. 2014 investors did not understand Nadella and the cloud. 2022 bears viewed NVIDIA and dismissed AI. Tesla and autonomous is the same narrative. So you got Dan Ives basically saying Tesla's FSD moment is similar to the iPhone moment in 2007, cloud in 2014, and GPUs in 2022 with NVIDIA. If that's the case, and he's right about that, then Tesla is going a lot higher. He then says bears have missed every transformational tech name of the last decade and will miss the AI revolution-driven tech bull market as well. So there you go. That is Dan Ives' perspective on what we can expect from this bull market. IONQ. Okay, this one, I know you guys have been asking me to look into this. I have not had the chance to look at this. I know this is quantum computing. This is up 7% today. Still have no idea what they do. I will take a look at them. I just got to get some time. Yesterday, I had a bunch of stuff to do after the market closed. I have a couple kids I coach in California for debate. I had a 2-hour meeting with them. So this weekend is the weekend I think I will actually sit down and try to look at IONQ. Like a lot of people have messaged me about this thing, dude. And like quantum computing, I actually spoke to someone who worked at Google in their quantum computing research department. This was about a year ago. And we were having a conversation. I was just like, so what is quantum computing? He started explaining to me. And then he was like, yeah, but dude, it's 20 years away. And I was like, really? He was like, yeah, it's 20 years away. That's why I'm leaving Google. And I'm going, he left Google because he was just like, I can't work on this for 20 years. This is a long time away. So I maybe, naively have had this perception that quantum computing is just not a thing right now. It's going to take a lot of work to get there. And any companies in that space, it's also just like companies that are not that exciting right now. But granted, that's my own, ignorance. So I have to do some research into this one and see if there actually is some momentum. Nathaniel says quantum is now. All right, so if quantum is now, then maybe there's some companies that can capitalize on that. And IONQ seems to be on the list that everyone thinks about. IONQ stock year to date as well is up 105%. So small cap up 105%. Looks like it's getting a ton of excitement. Over the past month, it's up 130%. We'll do some DD. We'll do some DD and take a look at it as well. So put in $100 and come back in 40 years. Yeah, basically that's the vibe I got from my friend. And so, maybe I need to do a lot more research on the overall market. Oh, wow. Hood up 1.3%. Look at the strength on that sucker. Look at the strength on Robinhood, $33. Even this is why I like this stock. Bitcoin can be down on the day by 3%, but because Robinhood's a real business and it's not literally just Bitcoin go up, I go up, Bitcoin go down, I go down, you can see progress. And look, it shouldn't be down just on Bitcoin because they had amazing results in October around net deposits, margins, equities, options, etc. All of that factors into their top line growth and their earnings per share. And investors take a look at that and say, hey, this is good growth estimates. We need to take this seriously outside of just what's going on with Bitcoin. Also, there's some new strikes on Hood for 45, 47, and 50. The market makers have been waiting for this to happen. They finally opened up the option chains. So now if you want to sell covered calls out in the distance, you can sell them for 50, which is good because it's just a little bit better than selling them at 40. You can pick up some premium and they're also more out of the money. Shopify up 24%. Shopify $111. Look at Shopify. Shopify getting some real love here, up more than 24%. Holy crap, dude. Let me see if Shopify's on CNBC, if they have anyone talking about these earnings today. Usually Harley Finkelstein, who's the president of Shopify, tends to go on earnings. These are incredible numbers, dude. These are incredible results. The street's reacting to it very positively. Yeah, there's no one today. I think they might be on a little bit later on the show today, later. Shopify's crushing it. Shopify's absolutely crushing it. If you own Shopify, shout out to Tannor, my Canadian brother. For those that are in the maple syrup country, this is your tech company that defines Canada, in my opinion. And they're crushing, up 23%. MicroStrategy 336, Coinbase 318. Speaking of Tannor, let's look at SOFI. SOFI at 1382, currently down about 2.12%. Tannor, if you're free for 10 minutes, I can send you a link. You can hop on and we can talk a little fintech and you can give us the explanation for why the cult that you have created 3 years ago is gaining some momentum in regards to SOFI Technologies. SOFI right here, 1375. Look at the strength on SOFI. It was down 4%. Now it's down 2.5%. I mean, people are buying the dip. People are buying the dip on SOFI. If SOFI goes to $7 again, it's not the same as if it went to $7 a couple months ago, right? Like now people, the whole sentiment has changed around the narrative of this company and people are excited about it. And financials, again, 2025 should be a tailwind along with rate cuts. So the idea that SoFi sees 20 in 2026 at $7, it seemed wild. Now at 14, touching 15, maybe it has a chance. Maybe it has a chance it can get there. There's no news on SoFi this morning from my understanding, but in general, SoFi is just getting some love. Tannor, I put the link in the chat. So there's the link. You can get it from right there. Okay, what else do we have going on? So MicroStrategy 337. MicroStrategy, again, is barely down 0.5% right now, recovering a lot of what it lost. Robinhood 33.38, almost up 2% on the day. Wow, amazing momentum on Robinhood. That's great, up 1.8%. Where is Palantir? Palantir 59.76. Even Palantir, it's down 1%, but like it was at 62 yesterday. It's 30 cents away from 60 right now. So not too much of a decline. Royal Caribbean just went green. Where's Tesla? Tesla 340. Tesla as well, getting a green candle. Tesla right there at $340, down only 2.5% on the day. Oh, this is new. SoFi partners with BlackRock to offer retail investors access to sophisticated portfolios and increased selection. I did not see that this morning. Let me just confirm. SoFi Investor Relations. Okay, I don't see that on their IR page, but maybe that is somewhere else that we found. Well, we have someone who can help us explain and talk about it, which is Mr. Tannor. Tannor, what's up?
How you doing, buddy? I already shared the link. So if you, yeah, there you go.
Oh, this is the PR. Oh, there you go. All right. So this is kind of breaking news this morning. What is this new robo-advisor and partnership with BlackRock? And what do you think is the impact on this?
Yeah. So, I mean, whenever you're talking about the audience that's following this channel, it's a lot of very active investors, people who would do much better on a platform like Robinhood, which I'm also super bullish on. For some people, like I think about my girlfriend all the time where, you know, she has a good job, she makes good money, but she doesn't want to follow markets as closely. This is really where a robo-advisory platform would come in. Now, robo-advisory platforms are expected to grow at around a 30% compounded annual growth rate, like Some reports say up to 2030. Other ones say 2032. But massive growth here for a more casual style of investor. It's still very important, but it's not necessarily going to make or break the company. I really think that the stock is pumping based on, well, Trump's election, capital markets getting excited, and SoFi is going to be playing a role in all of that. IPO markets, capital markets. What Hood is doing for active investors, I think SoFi is going to be doing for bond markets, for selling loans. That there's no need for Upstart anymore because SoFi has now entered that market and they're going to dominate it.
Okay, so I have a lot of questions to ask, but how do you feel about this price action, bro? Because you got the most shit out of everyone for this one being stuck at $7. It's now up 100%. You've got to feel kind of just happy to see the stock finally break out of that channel.
Yeah, I mean, I'm excited. If you actually look at it from a valuation perspective, I still think that it's, cheap and not where it could be going forward. So SoFi's 2026 guidance, they think they're probably going to come in and around 70, 80 cents of EPS. If you ask me, they probably come in higher than that guidance because they've done that for every single guide that they've ever put out. And then they said that they're going to compound at a 25% EPS rate every year after that. Okay. So look at the price to earnings growth ratio on SoFi. They do not look expensive. Okay. So I think that this is going to continue to grow. And that was before. So Chris Lapointe, the CFO, said whenever they put out that projection, that was before any new products that they were going to put out. Now, with this loan selling platform, which is brand new to Q3, it is a unbelievably massive new market. I mean, changes the way that people should underwrite this company. And that they've only started doing this for personal loans, and they just got into servicing personal loans for that market as well. They're going to do the exact same thing for student loans. They own 60% of the private student loan market. You want to get into some really, the Palantir community will start talking some crazy stuff about what their company can do. See what happens whenever Trump does something extreme to the Department of Education and SoFi owns 60% of the private student loan market. Where do they come into the market there? Okay, so there could be some news that comes out that absolutely skyrockets this stock. That's getting very bullish. If we be very realistic, I just think that they have a great standing in neobanking and they're going to dominate in lending.
No, that is fair. I think that's very fair. And I think I think you know this better than anyone, but sentiment has changed, right? I mean, now people are buying it at 13, 14. They don't want to touch it at 7. So all the bullish things you're saying, I think we've known and they're starting to come out more, but now people are excited about the stock.
Easy with the Palantir talk, says Joe. Yeah, I mean, I take more of the side that Stephen Fiorillo had on the last Palantir weekly the other week. I thought that he had a good stance. Great company, love it, but it looks expensive in my opinion.
Okay, so SoFi right here trying to push $14 again, kind of recovering a little bit from the dip this morning. So you think they're going to beat estimates? You think this new loan platform is going to help them do well? And Robo Advisory essentially is a platform that people pay something like per month to have something auto invest for them. That's essentially the point of it, right?
Yeah, they're them, so they'll just pay percentage of the assets under management per year, and yeah, it'll take care of that.
Okay, that's fair.
That part I do not think is super exciting. They said they're about monetized at about half the rate that they want to get into for SoFi Invest. So they think that they could double the average revenue per product for SoFi Invest. So that is exciting, but it still is a very small percentage of their overall revenue. They got kicked out of crypto whenever they got their bank license because that's just, the law. But with Trump coming into office, with the potential kick out of Gary Gensler, these sort of things, they actually think that these rules might change and that SoFi might get back into crypto.
Yeah, and ultimately that's why Noto wanted a Republican administration to get elected.
Yeah, he said it himself.
Yeah. Give me your thoughts on Robinhood. 33.50 up 2%. We saw October metrics. Vlad was on CNBC. What's your reaction to the surge in Robinhood right now?
We're going higher. It deserves every bit of it. They are skyrocketing in the charts as you've been showing off. And in my opinion, I just recently did a video on the pricing between Coinbase and Robinhood. And it's in my opinion that people who use Coinbase for retail trading are doing themselves a disservice. Robinhood is much cheaper for them. And now with the acquisition of Bitstamp, they're going to be offering so many more supported assets, like 117, I think, is the amount of different coins that Bitstamp offers. They're going to get into custodial fees, get into institutional trading, and all that stuff that Coinbase, I think, is going to dominate. They have like an 85% share of crypto ETFs. It makes up for 0% of their it's really 2.8% of Coinbase's revenue. Where they make all their money is on things like Coinbase One subscriptions, trading for retail, all of these things, and they're charging you an arm and a leg versus other competition. I think Hood comes into the market. They offer the lowest pricing for futures, for index options, for options in general, crypto, and they are going to dominate. So I liked the October numbers that they put out. I think November numbers are going to blow them away. This is going to be a record-breaking quarter. And unlike all these other stocks that are potentially seeing better multiples or people are getting more bullish, Robinhood deserves every bit of it because the trading is actually benefiting them fundamentally.
Yep.
So I'm loving Robinhood right now.
I agree. I mean, that's why I even bought Robinhood at $32.95 because their multiple expanding to me is not just a function of the bull market. It's them literally growing their top line revenue because of the bull market, which means you expand the multiple, right?
Can I talk on Shopify for a second?
Yeah, I was just going to ask, this is the last question for you. What is this company? Why is it up 22%? And is it the best place in Canada to work for?
It probably is. I don't own a single other Canadian company. But Shopify is a much bigger position for me than SoFi and Robinhood.
Wow. I didn't know that.
All combined. It's the second largest position I have under NVIDIA.
Holy wow. Okay, so you were really bullish on Shopify.
Yeah, I've been super bullish on Shopify forever. I think it's the only company that I've actually like fallen in love with. I think that I'm going to have it for the next 60 years. They will be the one-stop shop for all e-commerce. Or sorry, I shouldn't even say e-commerce. I should say commerce, right? They are extremely focused ever since they got rid of their logistics business. I think that it's a much stronger business. It's a free cash flow printing machine. They are going to do better and better and better till I die.
Are you not at all worried about just Amazon as competition?
No, they've partnered with Buy with Prime. So Shopify is getting in bed with a lot of companies. It's more of a partner rather than trying to I don't fear any competition for Shopify. They bring on about 40 new merchants for every one merchant that leaves their platform. So enterprise is one of their fastest growing places. Other competition like Salesforce Commerce, where people thought that they were going to win more enterprise clients, are leaving in droves to go to Shopify. Shopify Plus, which is their higher end merchant, is some of the fastest growing areas for them. They're doing amazing.
Yeah, dude. I mean, Salesforce Commerce or Squarespace or Wix. I've used Shopify before. Like Shopify's integrated platform is just the best in class when it comes to this.
That's how I learned about the stock, right? I was originally a merchant myself, and I was like, man, this is so clean. And then just as you learn more and more about the business, like I fell in love because I was a user.
Right.
So I think they have a massive long way ahead of them. People are realizing that this is going to be a massive offline growth thing too. So Shopify Point of Sale Pro, massive growth there. B2B merchants, going to be massive growth there. And what they even just said on their earnings call here is that they are getting a massive amount of B2B clients and like wholesale sellers. And now wholesale sellers are taking a stab at direct to consumer because the tools are right there.
Right.
And so you're seeing this massive cross sell between companies that are direct to consumer that potentially are bundling and selling it to, wholesale clients. And then you're also seeing the opposite happen. So if you give everyone all of these tools all in one, they don't want to use 8 different tools. They want to use one tool that makes it really easy to go international, to help with your tax reporting, to help with everything all in one. And now, as Shopify gets larger, they can get into things like, loans and all these things that expand from a financial services perspective. Right. That's really where I think the only thing that I've ever really hated about Shopify, aside from the logistics business, which went worse than what I thought it was going to do, was the fact that they never got into some Cash App like experience. I really give it to Jack Dorsey taking on the consumer point of view and the merchant point of view. That was amazing. Shopify, the only time that they ever go after the consumer is if it like directly benefits the merchant. So the Shop app, for example. I wish they would have collected consumer deposits and gotten a debit card or something along these lines. I think that they would be unbelievably huge, but they never did.
Right. All right, there we go. Tannor, thank you for your takes on Shopify, Hood, and SoFi. Tannor's YouTube is there in the chat. If you guys are following me and not following Tannor, you should definitely subscribe to Tannor. He goes live every day talking about fintech. And you guys,
thank you, brother. I appreciate that. Check out Nubank tomorrow. That one's going to be a huge one.
They have earnings tomorrow?
Yeah.
Okay. That's awesome.
All right.
We'll check it out. Thank you, Tannor. Appreciate it.
Brother.
See ya. All right, folks. Markets are continuing to gain some momentum from that 930 dip. You got Robinhood right here, 33.56, up 2.5%. Shopify up 22%. SoFi just like it's getting ready to touch $14 at $13.91, down about 1.4%. And then take a look at MicroStrategy, continuing to go green. At one point, hit almost 350 in the morning, 345 up 1.66%. Tesla down 2.8, but Tesla still in the 340s. Bitcoin 87,000. So Bitcoin not taking a breather. It was at 85,000 this morning, coming right back to 87,000. It did hit 90,000 overnight. And then Palantir got very close to 60, right now at 59.44, but it looks like it wants to get back to that $60 range. So the market is saying we are ready to buy this dip. At least some people in the market are ready to buy this dip. NVIDIA right here, 1.54% as well. Even though things opened up a little bit more red. Robinhood here at 33.50 currently on the day. Tesla is indeed holding up. Meta right here, 595.35. Meta's up 2.2%. Upstart is down 9% today. Upstart was up like 30% last week. So it's okay that Upstart is taking a breather. But this one, AI loan lending, you heard Tannor say he thinks SoFi can kind of replace their business. I don't fully even understand what Upstart does. I had another friend who worked at Upstart, by the way. And I think I told you guys the story. He left Upstart a couple years ago and he took all of his vested stock and he just cashed them out and he bought a ton of SoFi because he just didn't believe in Upstart. Obviously, Upstart has done way better than SoFi. But the core business itself, a lot of people have not fully understood. But it's around AI loan lending and rates come down. Loan originations can go up. If they have any proprietary algorithms on helping them match loans to the right parties, that might be a reason the market is taking it higher. Netflix is above $800. $815. $815 on Netflix, bro. Netflix. This is the one I will openly admit I missed this one completely. Because every time I go to Netflix, there's nothing to watch. And I let my personal bias of not being able to, honestly, my personal ADHD of not being able to say, dude, on Saturday night, I went on Netflix. I was like, I'm going to sit down and watch something. I'm actually going to watch something, okay? I'm going to legit watch something. AppLovin is up 0.11% as well. AppLovin just went green. And you know what I clicked on? I clicked on The Notebook. I was like, I've heard of this movie before. People talk about it. It's supposed to be some big romantic film. Dude, within 2 minutes, I was like, I'm not watching The Notebook. I went back to TikTok or Instagram Reels. I could not, I just couldn't. There's nothing on Netflix for me to watch, bro. Nothing. And so that personal bias over the past 4 years led me to believe that Netflix is a broken stock. It wasn't, because there's other people that can sit through The Notebook and give Netflix the watch time. I can't. And it's not just The Notebook. It's anything. I can't watch anything. I just don't have the patience for it. But yeah, people are willing to pay a premium price for the content. And Netflix right here at $350 billion market cap. Now Netflix. I can watch Squid Game. I am really excited for that one to come out. Squid Game Season 2, December 26th. I'm going to binge that in one night. I loved that show in 2021. I think it's top 5 shows in Netflix all time. I really do. I think it was one of the best shows ever. And then the show where the guy and the girl and that show, you guys know of that one with Joe Goldsberg, all that stuff. I can't wait for that show again. Season 5, I think that's the season finale. Those 2 shows I will binge, but everything else is I just can't watch. The Mike Tyson Jake Paul thing is weird, bro. I don't understand why Mike Tyson and Jake Paul, Robin at 33.55, are fighting. I don't get it. Mike Tyson's very old. Jake Paul's very young compared to him. This is just weird. This is kind of cringe that they're actually fighting live. And I'm probably not going to watch that. I mean, that's not that. Maybe I'll watch it, but I don't know, dude. That entire thing just felt very weird to me. But it'll probably get some viewers. Chris CRM says you will watch The Notebook with your eventual girlfriend and bear it. Dude, I got so bored after 3 minutes with The Notebook. I was like, I need to be stimulated very quickly when it comes to content. I think that's why I like TikTok and Instagram Reels and like YouTube videos work. Because like immediately I'm like, all right, so this is what I'm watching. But like they were like building up the story. They were talking about the background. I was like, dude, I don't care. Just give me the climax. Like what happens in the movie? Like where's the scene where the girl starts crying on the beach? Or like I just wanted to get that over with and keep going. But again, Netflix does have a lot of content for people that care about it. And obviously they've been able to grow out of that. So there you go. Netflix 815, Rocket Lab 1493, Bitcoin 87.3. Bitcoin trying to make its way back to 88. S&P 500 flat on the day. Palantir 59.33. ExxonMobil 121. HIMS 27.42. Marathon down 1%. CleanSpark was down 7%. Now it's down 3%. So the miners making a little bit of a comeback. Robin at 33.64. Meta 592. And then MicroStrategy 347 right here on the day. You have a 60-second attention span. You know what's weird though is I can watch a podcast for like 3 hours and like legit listen to it. I guess maybe not watch. Maybe I'm like actually listening instead of watching. But my attention span when it comes to people talking, I can like legit pay attention to. But when it comes to like building up of a show, I don't know, bro. It's hard. It's really, really hard to keep watching it. But when it comes to podcasts, I'll listen. I will continue to still listen. We got an update on Elon. Elon right here is up now 70 billion in terms of his wealth. Let's take a look at this thing real quick. And then we'll try to get some more Tesla updates because I do think we have some different Tesla updates this morning. Tesla China insurance registrations, I believe, are out. Let me take a look at that. But let's look at this and then we'll keep going from there. I watched Suits a long time ago. But yeah, Suits I watched in like 2014, so not watching it again.
Shares of Tesla have jumped nearly 40% since President Trump's electoral victory last week. As of yesterday's close, those gains have lifted Elon Musk's net worth by about $70 billion to close to $320 billion. That's according to Forbes. That puts him ahead of Larry Ellison, who is now the world's second richest person, by nearly $90. That's $90 billion. Elon Musk is ahead of him by about $90 billion. There was a Bloomberg report talking about how hedge funds betting against Elon Musk had lost about $5.2 billion in paper losses since the election.
$5 billion in paper losses are these hedge funds. I have an update on the short stuff on Tesla as well, but that's a lot of money they're down because of Tesla.
Last week, anybody who was shorting the stock obviously has gotten hurt pretty badly. Right now, shares of Tesla at $340.28.
Ron Barron's chortling somewhere. But we're back to Brewster's Millions.
How do you spend it quick enough?
He just can never.
This is the update on the short report. So S3 Partners says the pain might not be over for Tesla short sellers. We expect continued short covering in Tesla due to the rally-induced short squeeze, which will force out many of the 2.4 million shares we saw shorted over the past month. Their losses now total nearly $8 billion since Trump's election win. That's wild. Last week, and nearly $13 billion since Tesla's Q3 earnings. Hedge funds that are short Tesla, $13 billion you've lost since Q3, $8 billion since Trump got elected, $2.6 billion yesterday alone on Monday. That's wild, bro. That is wild. Like being short Tesla was just not the move over the past couple of days. It was, or the past couple of weeks at this point. It was not the move at all. Amit, what were the Bitcoin ETFs and flows yesterday? Was a record? Yeah, it was 1.1 billion. I think it was like the second to third largest day on record for the Bitcoin ETF inflows. So big day for Bitcoin ETFs, and people ended up buying a lot of it to get more exposure into Bitcoin. All right, so guys, we have short float reports that are out. So put a ticker in the chat and let's do this for 5 minutes. Let's go through all the short floats that you guys want to see. So put a ticker in the chat. I'll start off with Palantir. This gets updated every 2 weeks. We have the short float as of October 31st. Palantir, take a look at that. Palantir short float went down 10%. That's wild, right? Palantir short float went down 10%, even though the stock is up. This was right before the earnings, but the stock was still up a ton before earnings. So next week we'll get the actual short float post earnings from November 4th. But now percentage of the float that is, so there's 4% of people that are snorting the cocaine of Alex Karp's Palantir shorts. 85 million shares sold short. So only 4% of 2.2 billion shares outstanding. Pretty damn incredible for Palantir. And maybe those people stop doing drugs sometime soon as well. SoFi shorts did go down dramatically as well, down 10%. So it used to be 18%. Now it's down 15%. 18% versus 15%. So you got the SoFi shorts deciding to say, hey, we're going to give back some of our money because we're not going to keep shorting this company. So that one is now only 15% versus 18% that was shorted. Affirm, let's look at Affirm. Let's see what we got with Affirm. This one, they said they're 3/4 away from being GAAP profitable. Affirm went down 5% as well. So now the percentage of the float that is short Affirm is 7%. Let's take a look at SMCI. SMCI, I would imagine this one might go up. SMCI, that one's down as well. So still a 19% short float on SMCI. Wow, the shorts must be so happy. SMCI is down 50%. So if you've been short for the past month and 20% of the float has been short, then you've done very well. That one is down about 5%. So about 5% of people covered that short for SMCI. Archer, let's take a look at Archer. Archer, we have 22% is short, 2.73% increased in terms of their short float. So that went up about 3%. 22% now is short for Archer. Let's take a look at Enphase. Enphase, we've got 12% of the short float, 12% of the float that is short, 7% increased as well on Enphase. So it looks like that one continued to go higher. Let's take a look at HIMS. HIMS was up 20% yesterday. HIMS short float went up 6%. Now 19% of HIMS is sold short. Tesla's like 2%. Tesla's very short, it's a very small amount, but the people that are short Tesla have done very bad. So Tesla, it went down about 1.79%. So about 3% of the float is short. But the 3% that is short lost $13 billion since Q3 earnings. Let's look at GameStop. Yeah, GameStop's an interesting one. There are some people I was reading yesterday, GameStop to $30 by December. They're thinking that from the technicals that it looks like that's possible. And in this market, maybe that happens. GameStop short float went down a little bit, but still 9% of the stock is sold short. Let's look at NVIDIA, which I think is very small short float. Yeah, NVIDIA, 1% of the float is short on NVIDIA, 246 million shares. I don't know who would be shorting NVIDIA, who feels like that's a thing that even you want to take the risk on. But NVIDIA down about 1% in their short float. Let's look at Shopify. Shopify is up 25% on the day. Shopify short float is 1.7%. So again, the short's really not messing with a company like Shopify. CleanSpark, let's look at that one. Then we'll do MicroStrategy. CleanSpark is 22% sold short, 9% increase. MicroStrategy is, they won't give us the percentage of float, but 4% it is down. So people are covering some of that short float. And then Coinbase short float is 4%, down 10% from the previous last 2 weeks. Okay, let's do three more. Nike, Enovix, and DraftKings. So let's look at Nike. Nike right here. Nike, 2% short float, nothing too crazy. DraftKings is 5% float, down about 1%. And then Enovix right here is 30. Wow, holy crap. 30% sold short, down 6% from last time. 30% of the market is shorting Enovix. MicroStrategy 347, Robin at 33.26, Meta 591, Netflix 813, SoFi 1385, Tesla 341, Nvidia 148, Palantir 59.18. All right, so seeing a little bit more red. Bitcoin still holding up at 87.3. We have that 1030 slam that potentially could happen as well. So seeing a bit more red, but nothing as crazy as like a real red day, even though we are seeing some red. Enphase is down another 3%. Dude, Enphase now for the past week. Enphase for the past week, 20% down. Past month, 40% down. Year to date, 53%. The stock has absolutely collapsed, and there is no bottom in sight because it keeps going down another 2-3% every day. The market really thinks that solar is dead for the next 4 years. It's so crazy how a Trump win could like change the trajectory of Tesla by the tunes of hundreds of billions, and for Enphase, it just takes away everything. It's really wild, bro. Really wild. I mean, you don't use Fintel for the short update. I use it sometimes. I mean, Wall Street Journal to me is just like quicker to get the results, but Fintel is good. Fintel also shows you the institutional ownership, which is really good. Let's see if they updated Palantir's institutional ownership. Let's see. Because now that's at 49%. Fintel, no, they haven't updated. It's still 44.73%. The Bloomberg terminal says 49, so it looks like that should be updated soon. But Fintel saying 975 million shares are long institutional. I think that's closer to 1.1 billion now that it's 49% institutional on the terminal. Amid that Bernstein article was insane. Never seen anything like that. Huge. Yeah. So the Bernstein report yesterday saying to their clients, just go buy and get crypto exposure ASAP. That was pretty wild. I thought it was fake when I saw it. But then I saw one of the analysts who wrote the report. I actually know him because he writes the report on Robinhood. So when I saw his name, I was like, no, this is real. This is not a fake report. Like I saw this yesterday and I was like, did they really just type 4 sentences and tell their clients to just buy as much crypto as possible? And yeah, Bitcoin is at 80K. We'll keep it simple. Don't fight this. Add crypto exposure ASAP. Call us if you need help. And that's the report they sent out yesterday, November 11th, to their clients. Wild. Absolutely wild. They are fully in belief of the overall Bitcoin thesis. They believe Bitcoin 200,000 by the end of 2025. And they're advising their clients to continue to get exposure. Solar is my underrated play. Everyone thinks it's dead. Meanwhile, Elon says it's the future of energy generation, and folks like Casey Hanmer can show how insanely profitable can be DCA. I don't think you're wrong on the long-term thesis. I just think short-term, look, you got to be practical. Like, my parents are not going to get solar panels on their house anytime soon. And no matter how many solar salespeople come to our house, we're not doing it. Why? Because A, it's a bit a hassle. B, we don't want to finance it at an expensive rate. C, we just don't care enough about it, right? Like, gas prices are not exploding to the point where like we have to find some cost-saving measure. So the commercial application of solar, I'm not fully convinced of, given that the world is chasing nuclear. I mean, if the world was convinced that the commercial application of solar energy was massive, they would not be sending Oklo, a pre-revenue nuclear energy startup that's public, up 500%. Like, the market obviously believes there's value in nuclear over solar. They would just buy Enphase at that point. B, if the residential element of solar is not growing, which as per Enphase's earnings, it's just not growing at all, then in the short term, I don't know if the DCA there is exciting over the next couple of years. Now, over the long term, maybe. But imagine you get, JD Vance winning in 2028 and there's still, drill, baby, drill. There's still no design. I mean, Trump's going to pull out of the Climate Paris Accord in the coming weeks. That was announced yesterday. I mean, the just idea of solar as a concept is just not that welcome anymore, and the incentives are not there. So that's the bearish thesis. The bullish thesis is that it keeps expanding, and commercial applications of it start expanding as well. But as of now, I don't fully see that right now. Also, doesn't Tesla do solar? Tesla can do solar panels as well? So like, I'm not saying Tesla's going to take Enphase's lunch, but there is an argument where if I already have a Tesla car, maybe I, decide to do my solar panels with Tesla too, potentially. Not about individual homes. I recommend reading Solar and Batteries for Generic Use Cases by Casey, along with We Can Terraform the American West. Yeah, I'll look that up. I'm always interested in learning a lot more about different elements of solar. But in the short term, it does feel residential applications of it are definitely not intact. I mean, in the chat, do you guys have solar on your houses? Are you looking to get it? And if you're not looking to get it, I guess the question is why. And if you're not, then maybe there's a lot of other people that are not looking to get it. Tesla right here, 338. Tesla down 3.35%. Shopify now 25% on the day. Shopify just crushing it right now. And it's doing well. Amit, I'm sorry, but Enphase sells inverters. Yeah, obviously Enphase does not sell the panels. And I know at least that much about Enphase to know they don't sell panels, they sell inverters. But the point is, people have to want to have solar panels on their house for the demand for inverters to also exist, right? And if the demand for panels is not there, just because people don't need to, because gas prices are down and they're fine paying electricity bills without having to transition their entire energy system inside their homes, then Enphase demand goes down as well. Microinverters only work if people really want to transition to solar. And as per their earnings, no one's transitioning to solar. That's why they're expanding internationally as well. They're trying to get growth outside of the United States. And like, that growth is okay in Europe. It's not really that good. Along with the fact that their gross margins are down from like 48% to 45.7%. That's also not the best thing that the street wants to see with declining growth. I just don't see the bull case right now for it, outside of the fact that the stock is bottomed. That's it. Same thing with Celsius, dude. Celsius and Enphase are the same to me. I don't see any, wow, Celsius down another 4%. I don't see any bull case for Celsius other than the stock is down 75% or 70%. I'm like, okay, if that's the bull case because it's at the bottom, then you buy it just because you think it has nowhere else to go but up. But outside of that, I don't see any bull case. And same thing with Enphase, in this administration at least. MicroStrategy 351, currently up 3% right now. Tess says, I'm not ever getting solar as I live in England. Yeah, internationally, it's just not that big of a deal either right now. Any thoughts on Rocket Lab pre-earnings? I built a 1,000 share position at 13. I might add more if we see a significant dip. I have no idea if Rocket Lab at 13, 14, or 15 is undervalued or overvalued. Like, I genuinely don't know. But I know that the momentum is on their path. And given the momentum is on their path and they are continuing to get tailwinds from space, yeah, maybe there's an argument that it continues going higher. But again, I just don't know enough about the company. I don't even know what to look out for today on earnings. Like, are we looking for revenue? Are we looking for profitability? Are we looking for launches? Like, I have no idea. So whatever they announce today, it'll be the first time I'm kind of looking deeper into it. At 13, I don't want to say that's a horrible price, but it was at $4 in the beginning of the year. So you are buying closer to, a big move. And so the question is that a buying into strength and it's going to 20, or is that, kind of going to oscillate around that $10 to $15 range? Rocket Lab just turning green right here at 1484. So today on earnings, we're going to get a little bit more clarity on what's going on with this one. If you don't have electric heat pumps, then it's too expensive to get solar plus HVAC upgrade, no reasonable payback. Yeah, I think that's fair. I think that's very fair. And a lot of the solar guys that came to our house back in 2023, I remember we would get like one of them every month. In 2024, we have not seen solar salesmen come to our house at all. And maybe it's just geographically, they don't want to come to this neighborhood anymore, but there's a significant difference from 2023 to 2024. I remember, dude, even one of them came into our house one day, he was sitting in the living room and he was like really breaking it down to my dad. And like, we ended up not going with it, but they were around more often than not 2 years ago versus in 2024. Admit, if we get a dip, are you going to entertain a new position on Rocket Lab? If we get a dip to 10, yeah, I would probably buy 1,000 shares if we get it, or not 1,000. I would buy like 500 shares if we get a dip. I don't know if we're getting back to 10 though. If we get to 10, I would buy 500 shares and sell some covered calls on it, and I would start the process of a Rocket Lab position. But we got to get there. And given the strength of this sucker, I don't know if we're good. Dude, it was 1182 last Sunday, and I was thinking of getting into it, and now it's at 15. I'm like, all right, so I guess it's just running away at this point. I don't know. We'll see on earnings today, dude. Strength has been really huge. It is up a lot going into earnings, which tends not to be the best for stocks. But if they crush earnings, maybe this thing just continues to go higher. When is the last time you were in a gas station since buying a Tesla? It has been 2 weeks since I've been in a gas station, and it feels pretty good. It feels pretty good. Dude, I love driving that car so much, man. I just love it. I really love, I'm like a kid in a candy store when I get to drive it. Eventually, I guess the feeling will wear off, maybe. But it is so much fun, dude. It is great. It is great. Like, turn on the music, the sound system is great in the car, and you just drive. Like, I've never had this much fun driving a car, bro. And I've drove for like 6 years at this point. But it's just so much fun. I got all-wheel drive on the Tesla. I feel like I have to get all-wheel drive because of like when it snows, like that's what like helps you get through the snow. I got the medium. So there's the cheap one, Model Y. There's the most expensive one, and then there's the one in the middle. I think the most expensive one is performance, so I got the one in the middle. So not the most expensive, but not the cheapest one either. I got the Model Y, Greg or Georgie. I got the Model Y. You see his eyes and smile when you ask about Tesla. Yeah, dude, it's like Tesla, Palantir, and Robinhood, bro. My Tesla car. Like, if someone asks me about Robinhood or Palantir or my Tesla car, I start blushing, bro. I'm just like, what am I gonna say, dude? I love these things. I love it. It's just a fun experience, dude. And the white on white was the right move, dude. My parents thought it was the wrong move. Now they see the car, they know it was the right move, dude. The white on white is so beautiful. Looks really nice. All right, I want to show you guys this clip. I saw this yesterday on Farzad's channel. Shout out to Farzad. So he interviewed our boy Chris Camillo, who was on my channel once. And there's a 4-minute segment where they talk about Palantir and Palantir's valuation. I want to play that real quick because I know everyone's, trying to figure out Palantir. It's actually a 2-minute segment, so it's a pretty quick segment. But here's Chris Camillo yesterday continuing to discuss his thesis on Palantir and why valuation maybe doesn't matter.
Yeah, they're like the valuation's insane. You're insane for having that episode I did on Palantir on Dumb Money Live. And they're like, you're insane. You're way late to this game. No way on earth. And I put out a tweet. I said, I am the Palantir's. I'm not concerned at all about Palantir's valuation. Like they're multiple. It doesn't bother me at all. Not even a bit. And here we are today. That was at like $35 a share. I don't know where they are today. It's ridiculous. Like 50? That was like a month ago, right? And
I think
so
they were up 20% today after earnings.
Yeah. So, but there was a reason for that. There was a reason because like you're looking at the multiple and not understand. I still can't wrap and this is all I talked about in my episode. I was like, Palantir has like less than 400 commercial customers. How are you applying a multiple to that? Like do you apply a multiple to a startup that's been around for a year and be like, nah, can't give them that multiple? What do you mean a multiple? There is no multiple. Like they're trading at infinity of their sales because they don't have any sales yet, right? So just assume Palantir doesn't have any sales at all yet, right? And they could potentially have 20,000 commercial customers, 50,000. Could they eventually have 125,000 like Salesforce has? I don't know. But I sure as hell know that using a number of 370 commercial clients, looking at what that revenue is in the first 2 to 3 years that they're in that business and applying a multiple to it is not even something we should even care about or look at, right? So like there was such a huge disconnect there. And that's why I said it doesn't bother me because I'm not even looking at it.
Yeah.
Sorry,
Did you want to jump
about Palantir? But
it's good. Yeah, I actually have been going through the learning.
You guys agree with that? Does that make sense? Does that make sense at all? I mean, you talk about people that don't care about valuation, bro. Chris Camillo is like, you got all of us like, oh, it's bigger than Lockheed Martin. Oh my God, what's going on? You got Steve talking about this is ridiculous. What's going on? And then you got Chris Camillo saying, why do we even have a market cap for Palantir? What's the point of having a market? It's such opposite sides of the spectrum. Steve says this company cannot be worth more than Boeing. Chris Camillo says this company doesn't even need a valuation. It's just a company that we should value based on pure momentum and their growth and their leadership, etc. Like totally different ends of the spectrum. And so far, Chris has been right compared to Steve. So far, he's been right. I mean, since he's been saying, I mean, he went on my show when Palantir was 35 and he said valuation doesn't mean shit. Well, we're at 60. And I mean, at least for the time being, Chris Camillo was right. NVIDIA right here up 2.5%. So NVIDIA getting some love, trying to make it right back to that 149 level. But yeah, do you guys agree? Do you guys agree or disagree? Some of you guys are saying yes. Some of you guys are saying no. Some of you guys are saying valuation does matter. I tend to agree valuation does matter as well. I'm not fully on the Chris Camillo chain that valuation does matter. However, I do think his mindset is valuable to look at in terms of it does make sense. Like price to earnings on Palantir is stupid because they just turned profitable. Why would you think price to earnings is like this amazing metric to look at? It's not Google or Amazon where you can put a 25 to 30 PE and reasonably debate. Should it be 26, 27, 28, 21, 32? Like you can have that debate. With Palantir, it's at 295. With CrowdStrike, it's at 500. Like, does a PE really make sense there? Probably not. CrowdStrike's at 494. And if it doesn't make sense there, then maybe that's not the best metric. Now, there's other metrics like price to sales that I do think are relevant to look at and price to free cash flow. But I think his mindset overall makes sense in the context of trying to value a business simply based on the issues with conventional metrics that investors look at. Now, granted, I'm not in the camp that says valuation doesn't matter at all, because I do think that valuation does matter, and maybe sometimes it doesn't, but over the long term, I think it does make sense. NVIDIA at 149, NVIDIA now 3.65 trillion, NVIDIA back to being the world's most valuable company right here. 145.86. We did touch 149, so it looks like that 149 wall has been taken over. Let's take a look at the resistance on NVIDIA. And by the way, the other reason valuation does matter and it makes sense is because CARP is selling, right? I mean, the fact that CARP and Peter sold over $1 billion worth of stock means they also, like, they didn't sell $1 billion worth of stock when it was at 21 right after earnings in Q1. They sold it at, in CARP's case, 54, 45, and 37. So obviously they felt, or their financial advisors, whoever was advising them felt the valuation was getting up there because that would be the only reason you sell at those levels. So it does matter. I just think there's a good way to think about it in a holistic sense when we're looking at generational companies like Palantir. At 150, there's 1.47 million shares waiting to be eaten up for NVIDIA. So $150 million. You see that quick math, 150 times 1 million. I didn't need the calculator for that because I'm getting better at quick maths. $150 million is needed to break through that 150 wall for NVIDIA. Not a lot. $3.6 trillion company, 150 million. That's a drop in the bucket. So if there's enough demand for 150 million, then we're getting through for NVIDIA. Rodney says 99% of valuation models assume one, other companies are fairly valued, or two, that you can directly compare one company to another. Yeah, that's fair. And that's why the Lockheed Martin comparison is also kind of weird, because although the numbers look crazy, like Lockheed Martin is not Palantir, dude. Like they don't have the growth potential of Palantir. They don't have the scale of Palantir. They're a hardware manufacturer. Like it's a totally different company. So even valuing them is weird. It's just the raw numbers. When people look at that, they go crazy about it. But there is a lot of nuance in terms of that company compared to a company like Palantir. Your mother would be so proud. Correct. My mother would be proud. Dude, she was watching the show yesterday and she was like, what is a gifted membership? I had to explain. Well, like, she was like, well, what do these members get? I was like, well, they get nothing. And she's like, so why do they want to be a member? I'm like, they just want to support. I was like, so what? She's like, she just doesn't get it. It's like, it's a whole different world to her. But she was watching a little bit during the day yesterday. And she was like, gifted membership? What the hell is that? What is that here on YouTube? Are you going to look at Nubank yesterday? Yeah. I'll look at Nubank tomorrow. They're going to have earnings. Nubank also just incredible growth, dude. Growing at like 70%. Brazil, one of their biggest markets, 80 million users, $75 billion market cap. It is up there in terms of valuation, but because of their growth, their PEG ratio is like really small compared to other PEG ratios for other tech companies that are out there, because Nubank is growing so much. And Warren Buffett owns a ton of Nubank as well. So this one tomorrow is going to be a big one to look out. When it comes to earnings. 100 million in Brazil. Yeah, 100 million users in Brazil is wild, bro. Absolutely wild. So Nubank's a good one. We'll take a look at that one tomorrow as well. Okay, I need names for the Tesla. Guys. We got to name it something. We need a really good name. There's got to be a name that when I see it in the chat, everyone's like, yep, that's the name. That's the name that it's got to look at. Tessie Snipes. Okay. That's interesting. Tessie Snipes. Someone says the Carp Mobile. That is also fun. I think Carpy would be a fun one, but Carpy it doesn't roll off the tongue as well. White Wizard. Okay. It's gotta be a one word that rolls off the tongue. That's what it's gotta be. Full Stack. Okay, no, that one sucks. We're not gonna do that one. I said that because Davis sent it, so I want Davis to know I said his name sucks. Truffle Mayo. We're not calling it anything with mayo, dude. We're not doing that. NVIDIA 149.28. What if we call it? This is too long. But what if we call it hay in a needle stack? What does that sound? Hay, H in needle S. Hins. What if we call it Hins? Hay in needle stack. Hins. That's such a bad name, bro. That's horrible. That's so bad. Cocaine because of Carp's comments. Yo, low key, it is white. It is white. Cocaine. I don't hate that one. But maybe we gotta think of something that's a little bit more like for example, this is what I mean by a name that rolls off the tongue. When I get a dog, okay, I'm gonna get a dog. Robin at $33 right here, Meta 588. I already have my name for the dog. The name for the dog is going to be Bubba. Bubba. Okay. My dog will be called Bubba. You see how that rolls off the tongue? Hi, Bubba. Hey, Bubba. Bubba, go fetch. Like Bubba, right? That's a beautiful. I've always had this name. I don't know where I got it from, but Bubba. That will be the name of my dog. We need something like that for the Tesla. We need something like that rolls off the tongue, and that's cute, like Bubba. Bubba's a cute name. It's an adorable name. We need something like that. And until we find our Bubba, I think we're gonna have to figure out how we name this Tesla. That's a good name though, right? If anyone wants to steal that, feel free to steal that for your dog. But like Bubba's a good name in my opinion. Really good name. Shopify, they're not on CNBC today, so we'll probably hear from them later. But none of the VPs are on CNBC currently right now. Deep effing value. Yeah, that'd be funny. We call that. No effing way I had a cat named Bubba growing up. Really? Wow. Oh, look at that. It's a good name. NVIDIA's trying to get to 150, folks. 149, 149.4. Momentum's there. Those green candles are hot. It looks like there's a shot. Where's Tesla? Tesla's going red. NVIDIA's going green today. Tesla down 2.6%, but Tesla still holding 340, bro. Oh, by the way, did you guys know Tesla has $1 billion worth of Bitcoin on their balance sheet? I realized this yesterday. Tesla has 11,509 Bitcoin that's currently worth $1 billion. So maybe one of the reasons Tesla went up yesterday, and it might continue to go up. Again, this is a very small holding in comparison to the 20 billion they have in cash. But I mean, like if Bitcoin goes up, their $1 billion stake continues to go up. So that could be one argument why Tesla's getting a little bit of love. If Bitcoin goes to 100,000 and they make another like 100 million, again, not a ton for Tesla, but still a little bit that could get maybe the street kind of excited about it, or at least traders excited about it. Tesla 342, Nvidia 149.45. But maybe that's one thing that's bullish for Tesla. I got the Model Y white on white for those asking. Model Y white on white. Thoughts on Micron? I don't love Micron. I think it's a commoditized name in the memory space. I do think that their growth is exceptional, down 5% on the day, but there's other competitors to it, and like HP, for example. I don't personally know, is Micron better than HP or not? Micron's growth is better than HP, but do I want to buy Micron versus HP? No. If I was going to buy any of the semis, it would be Nvidia or SMH. I mean, that's the conclusion I've come to: Nvidia or SMH, because I don't know enough about the rest of the semis. A lot of them operate in competitive, non-monopolistic environments, and the only reason Nvidia has a monopoly is because they spent 30 years building these GPUs. So for me, if you're going to go long semis, it's Nvidia or SMH. Micron also is down a lot from where it was. It was like 150 back in July. So maybe there's an opportunity there, but ultimately they're going to have to put up even better growth numbers for the street to get excited. They did pump on last earnings though, but since they've come down a little bit. Nvidia does look like it wants 150 for today. Storm Shadow, Frosty, or Herbie. Someone said call it Debbie. Storm Shadow, I don't hate that name. Blanco, it is white. That is true. Stella the Tesla, it's an anagram. Dude, I haven't heard of anagrams in so long. You just jogged my memory on that. Stella the Tesla is not crazy. It's not horrible. RC, thank you for the $5 super chat. Palantir man on the plate. Yo, low key, New Jersey's a little weird with customizing your license plates, but if I can do that, I want to look into that. I'm going to get my license plate in like a week. They're going to call me to install it. I wonder what letters I get. Could you imagine if PLTR somehow ends up on the license plate, or TSLA? Like, that'd be wild, bro, if somehow that happens. It was so funny. Back in March, after I did the Vlad interview with Robinhood in New York City, I went to get dinner with Adam Bergman, or lunch. And on his license plate, he has something with PLTR. And so I posted a picture on Twitter. I was like, what are the chances I found I'm in New York and I found a car with Palantir in the license plate. And then I told everyone I was actually with Adam. But it was so funny because people were like, damn, like Palantir is really going global. And it is, because Adam's a big supporter of them. But it was pretty cool to see that. So I wonder what level of combination of letters I'm gonna get. Zero gas. So that's a good one. That's a good one. Zero gas. I like that one. That is not a bad one either. Palantir 300. That would be so dope. Palantir PLTR 1T. Palantir 1 trillion. I gotta see how expensive it is to customize a name, bro. I feel like it's like, I don't know. I feel like it can't be more than like $500 to customize a license plate. Let's see. How much does it cost to customize a license plate in New Jersey? Can't be more than $500. No, it's 50. Oh, I definitely should do this. $50, a one-time fee of 50 to personalize a license plate, an additional fee of 50 to reactivate. Dude, this is nothing. Bro, I think I need to do this. This is nothing. $50 is cheap. All right, we gotta get some PLTR on it. AIP, we gotta get something on this thing. Yeah, dude. I thought it was really expensive. I thought like the government gets mad when you do that stuff and they upcharge you on this. Davis says, Amid, how are you not going to shout me out when I literally have Palantir? Congratulations, Davis. This is your shout out for having Palantir. Like, is this what you wanted, David? You have Palantir on your license. Like, can you post or send me the picture? Let me show the chat if you want to send me the picture of it, and I can show it here. See, Davis, if you posted more about your Palantir license plate, more people would know about it instead of relying on me to say it for you. So maybe you actually need to show your love for your Palantir license plate by posting it more versus just having it. Maybe you need to market it a little bit better. Go with Walter White. I don't hate that. Walter White is not bad. I do like Breaking Bad. So that could be another reason why it's good. I don't know. Walter White doesn't roll off the tongue. It kind of does, but it kind of doesn't. Nvidia now. Yeah, Nvidia got a red candle. Who's selling Nvidia, bro? Why do they ruin the party? Why do people have to take profits? Just let it be. Like, have they never listened to the Beatles? Let it be. Goodness gracious, bro. Up 2%. Like, just chill out, bro. You look at that nasty red candle from 149 to 148.6. Why do they have to sell it that? Dar, thank you for the super chat. Miracle Whip, it's too perfect for you. Okay, Miracle Whip is basically mayo, so we're not calling it Miracle Whip, but that's a hell of a name, Miracle Whip, because it's a whip. And then I see. That's a good name. It's not a bad name. Reminds me of mayo, but it's not a bad name. Heisenberg, yeah, that one's a little bit cooler. Rolls off the tongue. I don't know. We got to see. We got to pick one of these names. Chris says, I just sold. All right, Chris, so you're the reason we got a red candle here. You just sold for a swing trade. Your swing trade caused our red candle. Oh, it's 1038. Yeah, we're getting a little bit of a dump right here at 1038. So a little bit of a market dump. Where's Bitcoin right now? Bitcoin 87.25. Yeah, Bitcoin just fell. Well, Bitcoin. I mean, it was at 88 in the morning, but it's been holding 87 for the past hour. SOFI 1388 again. SOFI looks like it wants 14, and then Robin at 3311 right here on the hood. Why are you selling, Chris? I think Chris is still in these Nvidia leaps as well that he still has. Where's Tesla? Is Tesla moving back to 350? Tesla 345. Tesla down 1.3%. Yeah, look at the green candle. All that money left Nvidia just now, just piled into Tesla in that green candle right there. Nvidia back to 149. All right, Nvidia's trying to fight back. Tesla trying to get back into the 350s. Amit, are you buying hood? Not here. I bought yesterday at 32.95. So unless we get back into those levels, maybe if we get back to 32.50, maybe I would buy a little more, but pretty much bought most of my shares on Sunday night. Amit, when are we going to get a compilation of your greatest hits for jokes? Yeah, we got to figure that out, bro. We got to figure out that compilation. That'll be a very, very funny video. Sold a $30 put for a hood on December 13th. Okay, let's see the premium you got there. $30 put for December 13th. $30 put. You got, wow, you got $100 today. That's not bad. That's what, 3%? Yeah, you got 3%. See that quick math. 100 divided by 3,000. Again, guys, we're in a new era. We're in a new era. $100. You probably got like 105 over 3,000 of collateral. That's 3% in 31 days. That's not bad. And if Robina goes to 30, I don't think that's the worst price in the world to buy that. It's not bad. Not bad at all. Call it the juice because the juice keeps on juicing. That's an insider for those that know. You guys know it. Yeah, Tesla's recovering. We're never calling it the snowflake mobile. Even if it's white, we're never calling it that. We're never calling it that. Where's Snowflake, by the way? Snowflake. I think it's had some strength. Snowflake, yeah, 123. I mean, look, this thing is still down 50% since IPO, whereas Palantir is up 500%, actually 600% since IPO. So, you know, we definitely found a winner and a loser when it comes to how the enterprise thought of them. And again, Snowflakes, they're still doing $3 billion in revenue. It's not like they're not growing. It's just the market's just overall not that excited about them. Let me play another clip from that Farzad interview that we did on Warren Buffett's investment style. I thought this was good. This was about a couple minutes, and let me see if you guys agree or disagree with this. But this is Chris Camillo, again, totally different trader on Buffett and his mindset for investing versus the current landscape. Celsius, by the way, down another 4%. So Celsius really getting hit right here at $26.30.
Go ahead, Hans.
I'm curious why, in your opinion, like that is basically the valuation or the value investor camp has basically taken over the entire investing world. They're trying to follow Warren Buffett, And I'm just curious why you think everyone wants to follow Warren Buffett when there are so many tech investors who have done so much better than him by investing in disruptive innovation in the future instead of trying to buy something good at a discount.
Yeah, so that's my other biggest pet peeve, right? So like the whole Warren Buffett, intelligent investor, all the stuff, right? Like all the old school stuff. It stuns me. It stuns me that people continue to think like that. And I studied Warren Buffett. I've studied every major investor of the last century, right? Like, there's not an investor or investment style I haven't researched deeply. And I have a tremendous amount of respect for Warren Buffett. Tremendous. But man, talk about an individual, an investment style that has not made sense for a very long time. He has had so many advantages the last 25 years. I mean, he has access to things that no investor would ever have access to. I mean, just go back to the 2008, right? Like the deals that he was able to put in place, like the access he has. He has missed so much. For a person that could have access to the world, that should be completely crushing it the last 25 years, right? He went through a long period of time when he literally not only did he not, but he wasn't with it enough for whatever reason in his later years to understand that he needed to empower someone else to understand what technology was, to miss out on a bulk of the technology revolution, which was the biggest investment of even his lifetime. It could have been, like, he already had plenty of big ones, right, that he did not miss out on, but that could have been like the most, with the amount of capital he had and the resources he had and the access he had. Could you imagine if Buffett was not asleep at the wheel during those years and would have been involved in that?
Crazy.
Could you imagine the power and the size of his entity today?
I can't actually.
I mean, fortunately, he eventually, because listen, I will say this. I mean, like I said, I have tremendous respect for him. He was smart enough to kind of eventually figure it out and make a monstrously huge investment in Apple. And again, people said, "Oh, he's too late." No, he wasn't too late, right? He's proven that now. But I also respect him in so many other ways outside of it. But people look at Buffett and they're like, "Oh, this is the guy." Like, no. He was definitely the guy to be watching and learning from and following at a certain point in time. Peter Lynch was the guy for a long period of time that you want to be following and learning from. Books like The Intelligent Investor were magical for a long period of time. But the world adapts, right? The world changes, markets change, the way opportunities change, and that no longer works anymore. It just doesn't. It just mathematically doesn't. You just look at returns. It doesn't. Now, I started trading a certain way in the mid 2000s, this thing called info arb, social arb, and for the past 17 years, it's the number one way in the world to trade. It's not debatable. Yeah, I mean, look at my, I think I average like 70 some odd % annualized returns going on my 17th or 18th year now. So as kind of the ringleader of this methodology, it certainly is no longer debatable. Will this methodology be the best one to apply in 10 years? I have no idea. I've always said, I'm always looking behind me thinking, when will the rest of the world really catch on to what I'm doing? And what I'm doing becomes exceptionally difficult. By the way, I will admit.
So again, kind of making the argument that at the end of the day, it is very, very difficult to get returns in the market. But the way to get them, at least in Chris's perspective here, is to be more momentum based and look at what's happening, what are the trends, how do you hop on those trends, whether that's cloud, GPUs, AI, whatever it may be, crypto, versus looking at Kraft Heinz and the cash flows of Kraft Heinz and thinking that like that is the most valuable way to analyze a business. How many people agree with it? How many people don't agree with it? Do you agree or disagree? I think there's nuance to it. I agree with the argument that Buffett did miss out on a lot of the tech revolution outside of Apple because of his rigid way of thinking of companies. But I also agree that there's a level of risk mitigation that Buffett was enacting because he's managing hundreds of billions, right? Not tens of millions, which Chris has openly admitted. I mean, Buffett manages a lot more money than him. So as a result, you have to have a different mindset. It's just, you also think if you put some of those hundreds of billions into a Tesla, into a Microsoft, into a Google back in 2010, 2008, like the returns would have been astronomical. I mean, it just insanity. You know, we wouldn't be talking about Berkshire at a $1 trillion market cap. We would be talking about it at a $2-3 trillion market cap, probably more than that if they had invested in big tech early in 2010. So it's one of those things that I think there's a lot of nuance in terms of trying to figure out what is the best way to try to figure out valuation methods. Chris CRM says, I agree, but the opposite is true. Things can drop faster too. You need to focus. Yeah, I agree. Things can drop faster. But the thing about Buffett is he's like, 15 to 20 years inside of a stock, right? Like, or at least 10 years into a stock. So if in 2010, if he invested in Google, Amazon, Microsoft, Meta, and Amazon, or Tesla, when they were all, I think, sub $100 billion companies in 2010, maybe sub $200 billion companies. I mean, dude, those companies are all worth $2 to $3 trillion right now. Like, he would have held them till 2024. That's for damn sure. Maybe he would have trimmed along the way, but I mean, look at Apple. He's just trimming after 10 years. So he would have definitely held them. We would be looking at a multi-trillion-dollar Berkshire Hathaway holdings. But he didn't do that, And so, and you also can't blame him. In 2010, it was risky to invest in Google. Like, is it a search engine going to be a multi-trillion-dollar business? Is Facebook just a website for college kids? Like, those questions were there. And that's where it took a lot of guts to think this is the trend and this is where it's going to go. And, Amazon was losing money off every little thing they sold. So it took a lot of guts to actually make that allocation of capital decision. But if you did it, then the returns have worked out. Tech isn't predictable amid it changes so rapidly. It's harder to actually value companies because they disappear more frequently. Yeah, that's fair. That's why it's not easy. But again, for the people that invested in big tech, that's the reason we give them so much praise. Even with the rapid changes of technology, they were able to see something that was happening. And that's why they were able to make a thesis on the predictableness of tech. Again, it's not easy. And maybe Buffett at his age in 2010, he just didn't want to deal with all that shit. That's fair. But if he did take that risk and thought, hey, maybe Amazon will become something bigger than what I think it is today, the returns would have been a lot higher for a lot of investors. Big tech just became big tech low key though over the last 10 years, as you mentioned. Yeah, so 2010 really was the time to get in early, and then 2014 to 2024 is when it kind of became a real thing. Nvidia 149.45. All right, right back to where we were before someone sold. So Nvidia right here at 149.3, up 2.58% right now. At 150, we still have about 1 million shares, 1.072 waiting to be sold. Palantir 59.35. Palantir not getting back to 60, kind of chilling out at this 59.35 range, down about 1.4%. CrowdStrike 337, Tesla 343, and then Robinhood 32.86, slightly green on the day. Buffett didn't miss out on anything. He's sitting on a pile of cash, waiting for everything to crash so he can buy in again. Hopefully, he's still alive when that happens. Yeah, but the thing is, even if everything crashes and he buys in, he's not buying in at, he's not buying Facebook at $50 billion. He's going to be buying Facebook at $1 trillion instead of 1.5 trillion or whatever, right? Like, if he buys the dip on some epic crash that happens over the next couple of years, it's not going to be like buying it in 2010 before everything took off. And I think that's Chris's point right here, is just like that overall revolution. And Buffett, I think Chris has a point right here, because he invested in Apple at $500 billion market cap for this reason. He realized that all these tech companies were taking off, and Buffett was in American Express and Wells Fargo and Kraft Heinz, and Apple was his big, all right, we're going to go in 2016. And that paid off very well because Apple has exploded. But if he had a portfolio of multiple Apples, just being the Googles, the Amazons, etc., he probably would have some losers too. But if he had a couple more of those winners, that I think would have cemented him in terms of his investing prowess. Regardless, Buffett's still the GOAT. He's done incredibly well, and he's managed more money than anyone ever. So Buffett still will have one of the best legacies in the investing world. Shopify up 25.39%, 112.82 on Shopify. So Shopify not slowing down. It does not look like anyone's wanting to sell this pump on Shopify. And why would you with those numbers? And those numbers are exciting. Hard to justify. Those numbers are bad. Let's get an update from CNBC, kind of go around, see some headlines, and then we will keep going from there.
And Tannor McKeel. Mackenzie, we'll begin with you. What a week.
What a week, Carl, indeed. Bitcoin came within striking distance of that 90K threshold early this morning, overtaking silver by market cap. But it hit some resistance, now only up around 5% in the past day. The real outperformer is actually Dogecoin, that popular meme coin, which Elon Musk has pumped up in the past, surged 115% in the last week. It now has a larger market cap than Ford and Delta Airlines on the back of Musk closely advising the president-elect down in Mar-a-Lago. Now, if we're strictly looking at more of those institutional flows, spot Bitcoin ETFs had their fourth straight day of blockbuster trading volume. Their total market cap is up to $92 billion, and BlackRock's spot Bitcoin fund is now larger than its gold fund. Plus, Ether finally starting to attract some meaningful demand from institutions after languishing for some time. Inflows into spot Ether funds hit a new record on Monday. And finally, on the CME derivatives exchange, that avenue for institutions to buy crypto futures contracts, premiums on Bitcoin and ETH remained massive, averaging 16% and almost 20% respectively. They were both hovering at around 7% before the election, Carl.
Mackenzie, what is the case for the other coins, all the Doge coins and everybody else besides Bitcoin? Because the regulatory focus has really centered around Bitcoin.
Well, exactly. And we've known for a while now that Bitcoin is classified as a commodity. So it's really escaped the skepticism of the SEC. So for these other coins, it could be instrumental if we see an ouster of Chair Gensler. And really, that's so much of where we've seen the market's interest shift to. You know, people are looking at who might be a potential appointee to replace Gensler under a Trump administration. You know, the Washington Post reporting that the shortlist includes Robinhood's chief legal officer, a former commissioner. They also are listing Chris Giancarlo, who's a former CFTC commissioner, who's at every crypto conference I go to.
By the way, Dogecoin is now worth more than General Motors, Hilton, Allstate, AIG, Oxy, NASDAQ, Dr. Pepper, Discover, and Ford. Dogecoin is valued at $62 billion currently right now.
So a lot of enthusiasm there that we might see a softer SEC, Sarah.
Yeah, I mean, all these altcoins really making a move. Mackenzie, thank you very much. Bitcoin miners also riding this crypto rally. Tannor McKeel's been tracking those stocks, which we don't always talk about, Tannor, but they really stand to benefit, don't they?
Yeah, hey, Sarah. So there's actually a great catch-up trade here in the pure play miners. So those are the ones that focus solely on Bitcoin mining, like Riot, Marathon, and CleanSpark. They've been laggards this year as others in the sector have pivoted or expanded to AI. So you can see Riot still down for the year, Marathon up just about 4% compared to Core Scientific, which is up nearly 400%. And analysts are telling me they see the most upside potential in the pure play group of miners over the next 12 months, given that they're the ones that are the most levered to Bitcoin. And we're getting a glimpse of that this week with the pure plays. They closed up double digits yesterday compared to, you'll see more modest gains in, Core Scientific and TeraWulf. So these names, the miners, they offer amplified exposure to Bitcoin. They're pulling back a little bit today as the Bitcoin rally pauses. But of course, that rally far from over. We've been reporting this for the past week, and it's not just about the many promises that Trump has made to the crypto industry. You've also got a supportive macro environment. His presidency implies larger budget deficits, more growth, potentially more inflation and changes to the international role of the dollar. And all of those things would be super positive for Bitcoin and its related assets. And then again, amplified exposure to Bitcoin. So a good way to play that here.
Tannor, I continue to hear, though, about the other side, which is they also have a lot of GPUs and they have power supply in place, which makes them an ideal place to potentially just use as data centers and doing large language models. And I know there are any number of investors who may want to get active in some of these relatively small companies if they haven't changed their strategy to potentially do so, even though they've obviously been benefiting given that rise in Bitcoin prices.
Yeah, and I think that's why you've definitely seen the split this year between the miners that want to diversify and, give more of their attention to AI and data centers versus the pure plays. And we know that, Donald Trump has made energy and power a focal point of some of the promises that he made, which did focus on the Bitcoin miners as well. We saw it back in the summer. That was sort of the first group of people in crypto that he spoke to and started to court. So, you know, we have a good setup, both idiosyncratically within crypto and in the macro landscape to look forward to over the next 12 years.
Tanea, thank you.
Bro, she used my word. She used my word. She did not ask me permission to use that word. I retired that word because I don't want to, you know, I don't want to overstay my welcome with that word. But I didn't give the word to someone else. She couldn't just use idiosyncratic like that, bro. She said it so calmly as if she had permission to use that word, bro. Anyway, so yeah, Dogecoin is mooning. Trump expected to try to halt TikTok ban. Yep, that. Hey, look, you heard it here, folks. You heard it here first, folks. We talked about this in April. If you were part of the market open in April, we talked about this. Jeffrey Yass, who is the head of Susquehanna Group, who has 21 out of his $28 billion inside of ByteDance, aka TikTok, bought 600,000 shares of DJT. This was some real investigative journalism that I did back in April. Why is he buying DJT when obviously DJT is not worth anything because Truth Social is Truth Social? Because he wants to support Trump. Why? Because he wants Trump to win. Why? Because he knew that Trump would try to halt the TikTok ban. And obviously, you know, that would be the sort of benefit of having Trump as president, which is why he ended up buying DJT. Also, you know, Trump made up the argument that like he thinks Facebook is having too much power with misinformation. Look, TikTok's a Chinese company, so I don't buy that argument. I don't think he thinks we need TikTok as a hedge against Facebook because at the end of the day, you don't want a Chinese company as a hedge against an American tech company, even if that American tech company is censoring and not operating in the best of ways. I think it's because he has friends and he wants to do them a favor and he doesn't want them to get TikTok banned. That is my take on it. I could be wrong, but that's my take. So it does seem like, let me look that up right here. Josh, thanks for that comment in the chat. It does look like that's the case. And look, you know, is that good or bad? I don't know. That's up for everyone else to decide. But it's not like presidents have not done this in the past, where to get elected, they make promises to very wealthy people. And in return, they get funding, even if it's indirectly through their public stock market companies like DJT. And then they follow through on some of those promises for those people. I mean, that to me is not a Trump thing. That is a just general problem with our broader ecosystem of presidential elections. But it is what it is. Like that's just what happens. Yeah, there you go. That's true. Washington Post. It happens all the time, dude. So you can't blame Trump for it. Biden's done it. Obama's done it. Clinton's done it. Every president has done something for some special interest. This to me has nothing to do, absolutely nothing to do with censorship and media and a hedge against Facebook and Google, because no one wants a hedge against Facebook and Google via China. Like that's just ridiculous, right? There's another American tech company maybe, but like the CCP, no. This has to do with Trump getting funding from some people that don't want this to get banned. So whether you love it or hate it, this is the truth, and that's what we got going on right now. Now, I'm curious to see how some of Trump's biggest supporters react to this. Because a lot of Trump supporters, for example, one of the chief advisors to Alex Karp and Palantir, Jacob Hellberg, he is super anti-TikTok, like super anti-TikTok. Like this guy, I actually met him at DC at one of Palantir's conferences, and he hates TikTok. Like he was on the cutting edge of Congress to get this thing banned. But he loves Trump, and he was a big supporter of Trump. I think he gave $1 million to the Trump campaign. So I wonder how someone like him is going to navigate the fact that Trump basically is going against one of his biggest campaign issues, but you know, he wanted Trump over Kamala. I guess the way you resolve that is by saying at least Trump's better than Kamala in his eyes. But he really fought to get TikTok banned in that bill when they sent like $90 billion to Ukraine. That was one of the stipulations in that bill. That's how the Democrats and Republicans actually signed that bill, because you got Ukraine money, Israel money, and then you got the TikTok ban, and that's how they got all the votes. So, I mean, we're going to see how Trump tries to navigate keeping TikTok alive. The thing about TikTok, though, is that, look, bro, I mean, I agree it's a national security threat. Tesla right here at 341. But, like, people haven't been talking about it as a national security threat in the past couple months. Like, remember when they interviewed the guy, the Singaporean CEO, and they tried to say he was Chinese, and they kept, like, grilling him, and he's like, sir, I'm from Singapore. I don't know what you're talking about. That hoopla happened, like, in January, February. or even in late 2023, I think that's when it happened. But now, like people haven't talked about TikTok as a security threat anymore. Like people just don't talk about it. So I think if it did get banned overnight, a lot of people, like the 150 million Americans that use it, would be like, why is this banned? Like, what's going on? Especially a lot of people make money off the product. You know, there's people that have their entire brands and personalities built on it. So it would be a little weird to ban it overnight. But long term, you know, there is an argument that the CCP probably shouldn't have that much control over American data. So we're going to see how Trump ends up pulling this off. Dogecoin is more valuable than Ford right now. Ford is at a $44 billion market cap. Doge is at a $54 billion market cap. And General Motors is currently at a $63 billion. Doge is at 54. So Doge is just under General Motors. That's kind of crazy that Doge actually flipped them, man. That is absolutely crazy. Shouldn't Shein and Temu be a security threat? Yeah. I mean, I know TikTok is more media-based, which is why politicians get on TikTok, but like Shein and Temu, it's not like they're not controlled by the CCP either, right? So you can make an argument that that's also not the best thing in the world. Okay, cool. All right, so question for you guys. Let's see what you guys think about this, and then we'll keep going. So we can either end the market open right now, since that's pretty much it for the day, and we'll be back on the market close, or Jensen Huang just did a new interview for 30 minutes. We can watch the interview together. For those that want to leave, you're free to leave right now. If you guys just want to watch the interview in the background, we can watch that. And we can watch that together to end out the show. So I guess put a 1 in the chat if you want to watch the interview. And if we have enough ones, then we'll watch it. If not, then we can end it up for today. He just did it with Goldman Sachs yesterday. So this one just came out. And so we can watch it if needed. Scott says you're free to leave. Yes, you're being held hostage. That's why. You're free to leave if you don't want to watch it. But if not, you're held hostage. Okay, a lot of ones. All right, everyone wants to watch it. All right, so let's do word of the day, and then we'll watch that. So word of the day, I don't know what the hell this word of the day is. What is this thing? Asyndeton?
Asyndeton.
The omission of conjunctions? What? The politician's speech was packed with asyndeton. She delivered each phrase sharply with no pause between her points. The speaker used asyndeton to create a dramatic, fast-paced rhythm in his speech. Okay, so it's like talking fast. Okay, well, so I'm the definition of this word then. It's about talking fast, then it's definitely, I would imagine, I'd probably play a role of having assyndetons. That's a weird word, dude. I've never heard this word, but the omission of conjunctions. Never. That's the car name. Yes, that's the car name, asyndeton. That's the car name. Amit, put it on, and then you are free to leave. All right, so here we go. Here's Jensen Huang yesterday with NVIDIA. I will put it at I'll put it at 1.25, and if that's too fast, let me know. But 1.25, I think, should be reasonable. All right, here we go.
Inventing the next computer era. It's fun to see all these amazing applications being created. The part of it that is just really intense is just, you know, the world on our shoulders.
I hope everybody's been enjoying the conference. It's a fantastic event. Lots of great companies, a couple thousand people here. And so really, really terrific. And obviously a real highlight and a real privilege to have Jensen, the president and CEO of NVIDIA here. Since you founded NVIDIA in 1993, you've pioneered accelerating computing. The company's invention of the GPU in 1999 sparked the growth of the PC gaming market, redefining computers and igniting the era of modern AI. Jensen holds a BSE degree from Oregon State University and an MSE degree from Stanford. And so I want to start by welcoming you, Jensen. Everybody, please welcome Jensen to the stage.
Thank you. Thank you. Thank you.
31 years ago, founded the company. You've transformed yourself from a gaming-centric GPU company to one that offers a broad range of hardware, software to the data center industry. And I'd just like you to start by talking a little bit about the journey. You know, when you started, what were you thinking? How's it evolved? Because it's been a pretty extraordinary journey.
Yeah, David, it's great to be here. The thing that we got right, I would say, is our vision that there would be another form of computing that could augment general purpose computing to solve problems that a general purpose instrument won't ever be good at. And that processor would start out doing something that was insanely hard for CPUs to do, and it was computer graphics. But that we would expand that over time to do other things. The first thing that we chose, of course, was image processing, which is complementary to computer graphics. We extended it to physics simulation because in the domain, the application domain that we selected, video games. You want it to be beautiful, but you also want it to be dynamic to create virtual worlds. We took step by step, and we took it into scientific computing beyond that. One of the first applications was molecular dynamic simulation. Another was seismic processing, which is basically inverse physics. Seismic processing is very similar to CT reconstruction, another form of inverse physics. And so we just took it step by step, reasoned about complementary types of algorithms, adjacent industries, kind of solved our way here, if you will. But the common vision at the time was that accelerated computing would be able to solve problems that are interesting. And that if we were able to keep the architecture consistent, meaning have an architecture where software that you develop today could run on a large install base that you've left behind, and the software that you created in the past would be accelerated even further by new technology. This way of thinking about architecture compatibility, creating large install base, taking the software investment of the ecosystem along with us, that psychology started in 1993, and we carried it to this day, which is the reason why NVIDIA's CUDA has such a massive install base. And that, because we always protected it. Protecting the investment of software developers has been the #1 priority of our company since the very beginning. Mm-hmm. And going forward, some of the things that we solved along the way, of course, learning how to be a founder, learning how to be a CEO, learning how to conduct a business, learning how to build a company.
Not easy stuff.
These are all, new skills, and we're just kind of like learning how to invent the modern computer gaming industry. NVIDIA, people don't know this, but NVIDIA is the largest install base of video game architecture in the world. GeForce is some 300 million gamers in the world. Still growing incredibly well, super vibrant. And so I think the every single time we had to go and enter into a new market, we had to learn new algorithms, new market dynamics, create new ecosystems. And the reason why we have to do that is because, unlike a general purpose computer, if you built that processor, then everything eventually just kind of works. But we're an accelerated computer, which means the question you have to ask yourself is, what do you accelerate? There's no such thing as a universal accelerator because,
Dig down on this a little bit different. Just talk about the differences between general purpose and accelerating computing.
If you look at software, out of your body of software that you wrote, there's a part of the software inside which has some of the magic kernels, the magic algorithms. And these algorithms are different depending on whether it's computer graphics or image processing or whatever it happens to be. It could be fluids, it could be particles, it could be inverse physics, as I mentioned, it could be image domain type stuff. And so all these different algorithms are different. And if you created a processor that is somehow really, really good at those algorithms, and you complement the CPU where the CPU does, whatever it's good at, then theoretically you could take an application and speed it up tremendously. And the reason for that is because usually some 5-10% of the code represents 99.999% of the runtime. Mm-hmm. And so if you take that 5% of the code and you offloaded it on our accelerator, then technically you should be able to speed up the application 100 times. Mm-hmm. And it's not abnormal that we do that. It's not unusual. And so we'll speed up image processing by 500 times. And now we do data processing. Data processing is one of my favorite applications because almost everything related to machine learning, which is a data-driven way of doing software, data processing is involved. And we accelerate the living daylights out of that. But in order to do that, you have to create that library. And so we just did it one domain after another domain after another domain. We have a rich library for self-driving cars. We have a fantastic library for robotics, incredible library for virtual screening, whether it's physics-based virtual screening or neural network-based virtual screening. Incredible library for climate tech. Mm-hmm. And so one domain after another domain. And so we have to go meet friends and create the market. And so what NVIDIA is really good at, as it turns out, is creating new markets. And we've done it for now so long that it seems like NVIDIA's accelerated computing is everywhere. Yeah. But we really had to do it one at a time, one industry at a time. Yeah.
So I know that many investors in the audience are super focused on the data center market, and it would be interesting to kind of get your perspective, the company's perspective on the medium and long-term, opportunity set. Obviously your industry is enabling, your term, the next industrial revolution. What are the challenges the industry faces? Talk a little bit about how you view, the data center market as we sit here today.
These giant data centers are super inefficient because it's filled with air, and air is a lousy conductor of electricity. And so what we want to do is take that few, call it 50, 100, 200 megawatt data center, which is sprawling, and you densify it into a really, really small data center. And so if you look at one of our server racks, NVIDIA server racks look expensive, and it could be a couple of $1 million per rack, but it replaces thousands of nodes. The amazing thing is just the cables of connecting old general purpose computing systems cost more than replacing all of those and densifying into one rack. The benefit of densifying also is now that you've densified it, you can liquid cool it, because it's hard to liquid cool a data center that's very large, but you can liquid cool the data center that's very small. And so the first thing that we're doing is modernizing data centers, accelerating it, densifying it, making it more energy efficient. You save money, you save power, you save much more efficient. If we just focused on that, that's the next 10 years. We'll just accelerate that. Now, of course, there's a second dynamic, is because of NVIDIA's accelerated computing brought such enormous cost reductions to computing. It's like in the last 10 years, instead of Moore's Law being 100x, we scaled computing by 1,000,000x in the last 10 years. And so the question is, what would you do different if your plane traveled 1,000,000 times faster? What would you do different if, and so all of a sudden people said, hey, listen, why don't we just use computers to write software? Instead of us trying to figure out what the features are, instead of us trying to figure out what the algorithms are, we'll just give the data, all the predictive data to the computer and let it figure out what the algorithm is. Machine learning, generative AI. And so we did it in such large scale on so many different data domains that now computers understand not just how to process the data, but the meaning of the data. And because it understands multiple modalities at the same time, it can translate data. And so it can go from English to images, images to English, English to proteins, proteins to chemicals. And so because it understood all of the data at one time, it can now do all this translation we call generative AI. Large amount of text into small amount of text, small amount of text into large amount of text, and so on and so forth. We're now in this computer revolution. And now what's amazing is, so the first $1 trillion of data centers is going to get accelerated. It invented this new type of software called generative AI. This generative AI is not just a tool, it is a skill. And so this is an interesting thing. This is why a new industry has been created. And the reason for that is, if you look at the whole IT industry up until now, we've been making instruments and tools that people use. For the very first time, we're going to create skills that augment people. And so that's why people think that AI is going to expand beyond the $1 trillion of data centers in IT and into the world of skills. So what's a skill? A digital chauffeur is a skill. Autonomous, a digital assembly line worker, robot, a digital customer service chatbot, digital employee for planning NVIDIA supply chain. We use a lot of ServiceNow in our companies, and we have digital employee service. And so now we have all these digital humans, essentially. And that's the wave of AI that we're in now.
So step back, shift a little based on everything you just said. There's definitely an ongoing debate in financial markets as to whether or not, as we continue to build this AI infrastructure, there is an adequate return on investment.
Yeah.
How would you assess customer ROI at this point in the cycle? And if you look back and you kind of think about, PCs, cloud computing, when they were at similar points in their adoption cycles, how did the ROIs, look then compared to where we are now as we continue to scale?
Yeah, so let's take a look. Before cloud, the major trend was virtualization, if you guys remember that. And virtualization basically says, let's take all of the hardware we have in the data center, let's virtualize it into essentially virtual data center, and then we could move workload across the data center instead of associating it directly to a particular computer. As a result, the tendency and the utilization of that data center improved. And we saw essentially a 2 to 1, 2.5 to 1, if you will, cost reduction in data centers overnight, virtualization. The second thing that we then said was, after we virtualized it, we put those virtual computers right into the cloud. As a result, multiple companies, not just one company's many applications, multiple companies can share the same resource. Another cost reduction. The utilization again went up. By the way, this last 10 years of all this stuff, 15 years of all this stuff happening, masked the fundamental dynamic which was happening underneath, which is Moore's Law ending. We found a 2x, another 2x in cost reduction, and it hid the end of the transistor scaling. It hid the transistor, the CPU scaling. And then all of a sudden, we already got the utilization cost reductions out of both of these things. We're now out. Mm-hmm. And that's the reason why we see data center and computing inflation happening right now. And so the first thing that's happening is accelerated computing. And so it's not uncommon for you to take your data processing work, and there's this thing called Spark. If any one of you, Spark is probably the most used data processing engine in the world today. If you use Spark and you accelerate it with NVIDIA in the cloud, it's not unusual to see a 20 to 1 speed up. And so you're going to save 10, and you pay, of course, you got the NVIDIA GPU augments the CPU, so the computing cost goes up a little bit, maybe it doubles, but you reduce the computing time by about 20 times. And so you get a 10x savings.
Sure.
And it's not unusual to see this kind of ROI for accelerated computing. So I would encourage all of you, everything that you can accelerate to accelerate, And then once you accelerate it, run it with GPUs. And so that's the instant ROI that you get by acceleration. Now, beyond that, the generative AI conversation is in the first wave of Gen AI, which is where the infrastructure players like ourselves and all the cloud service providers put the infrastructure in the cloud so that developers could use these machines to train the models or fine-tune the models, guardrail the models, so on and so forth. And the return on that is fantastic because the demand is so great that for every dollar that they spend with us translates to $5 worth of rentals. And that's happening, all over the world, and everything is all sold out. And so the demand for this is just incredible. Some of the applications that we already know about, of course, the famous ones, OpenAI's ChatGPT or GitHub Copilot or code generators that we use in our company, the productivity gains are just incredible. There's not one software engineer in our company today who don't use code generators, either the ones that we build ourselves for CUDA or USD, which is another language that we use in the company, or Verilog, or C and C++ and code generation. And so I think the days of every line of code being written by software engineers, those are completely over. And the idea that every one of our software engineers would essentially have companion digital engineers working with them 24/7, that's the future. And so, the way I look at NVIDIA, we have 32,000 employees, but those 32,000 employees are surrounded by, hopefully 100x more digital engineers.
Sure.
Yeah.
Sure. Lots of industries embracing this.
Yeah.
What use cases, industries are you most excited about?
Well, in our company, we use it for computer graphics. We can't do computer graphics anymore without artificial intelligence. We compute one pixel, we infer the other 32. It's incredible. And so we hallucinate, if you will, the other 32. And it looks temporally stable, it looks photorealistic, and the image quality is incredible, the performance is incredible. The amount of energy we save, computing one pixel takes a lot of energy, that's computation. Inferencing the other 32 takes very little energy, and you can do it incredibly fast. So one of the takeaways there is AI isn't just about training the model. Of course, that's just the first step. It's about using the model. And so when you use the model, you save enormous amounts of energy, you save enormous amount of time, processing time. So we use it for computer graphics. We, if not for AI, we wouldn't be able to serve the autonomous vehicle industry. If not for AI, the work that we're doing in robotics, digital biology, just about every tech bio company that I meet these days are built on top of NVIDIA. And so they're using it for data processing or generating proteins or for
that seems like a super exciting space.
It's incredible. Yeah. Small molecule generation, virtual screening. Just that whole space is going to get reinvented for the very first time with computer-aided drug discovery because of artificial intelligence. And so incredible work being done there.
Yeah. Talk about competition. Talk about your competitive moat. There's certainly public and private companies looking to disrupt your leadership position. How do you think about your competitive moat?
Well, first of all, I think there are several things that are very different about us. The first thing is to remember that AI is not about a chip. AI is about an infrastructure. Today's computing is not build a chip and people come buy your chips, put it into a computer. That's really kind of 1990s. The way that computers are built today, if you look at our new Blackwell system, we designed 7 different types of chips to create the system. Blackwell is one of them. So the amazing thing is when you want to build this AI computer, people say words like supercluster, infrastructure, supercomputer for good reasons, because it's not a chip, it's not a computer per se. And so we're building entire data centers. By building the entire data center, if you just ever look at one of these superclusters, imagine the software that has to go into it to run it. All the software that's inside that computer is completely bespoke. Somebody has to go write that. So the person who designs the chip and the company that designs that supercomputer, that supercluster, and all the software that goes into it, it makes sense that it's the same company because it'll be more optimized, it'll be more performant, more energy efficient, more cost effective. And so that's the first thing. The second thing is AI is about algorithms, and we're really, really good at understanding what is the algorithm, what's the implication to the computing stack underneath, and how do I distribute this computation across millions of processors, run it for days on end, with the computer being as resilient as possible, achieving great energy efficiency, getting the job done as fast as possible, so on and so forth. And so we're really, really good at that. And then lastly, in the end, AI is computing, AI software running on computers. And we know that the most important thing for computers is install base, having the same architecture across every cloud, across on-prem to cloud, and having the same architecture available, whether you're building it in the cloud in your own supercomputer or trying to run it in your car or some robot or some PC, that having that same identical architecture that runs all the same software is a big deal.
Yeah.
It's called install base. And so So the discipline that we've had for the last 30 years has really led to today. And it's the reason why the most obvious architecture to use if you were to start a company is to use NVIDIA's architecture, because we're in every cloud, we're anywhere you like to buy it. And whatever computer you pick up, so long as it says NVIDIA inside, you can take the software and run it.
Yeah, you're innovating at an incredibly fast pace. I want you to talk a little bit more about Blackwell. 4 times faster on training, 30 times faster inference than its predecessor, Hopper. It just seems like you're innovating at such a quick pace. Can you keep up this rapid pace of innovation? And when you think about your partners, how do your partners keep up with the pace of innovation you're delivering?
The pace of innovation, our basic methodology is to take, because remember, we're building an infrastructure. There's seven different chips. Each chip's rhythm is probably at best 2 years. At best 2 years. We could give it a midlife kicker every year, but architecturally, if you're coming up with a new architecture every 2 years, you're running at the speed of light. Okay, you're running insanely fast. Now we have 7 different chips, and they all contribute to the performance. And so we could innovate and bring a new AI cluster, a supercluster, to the market every single year that's better than the last generation, because we have so many different pieces to work around. And so when Blackwell is 3 times the performance, for somebody who has a given amount of power, say 1 gigawatt, that's 3 times more revenues. That performance translates to throughput. That throughput translates to revenues. And so for somebody who has a gigawatt of power to use, you get 3 times the revenues. There's no way you can give somebody a cost reduction or discount on chips to make up for 3 times the revenues. And so the ability for us to deliver that much more performance through the integration of all these different parts and optimizing across the whole stack and optimizing across the whole cluster, we can now deliver better and better value at much higher rates. The opposite of that is equally true. For any amount of money you want to spend, so for ISO power, you get 3 times the revenues. For ISO spend, you get 3 times the performance, which is another way of saying cost reduction. And so we have the best perf per watt, which is your revenues. We have the best perf per TCO, which means your gross margins. And so if we keep pushing this out to the marketplace, customers get to benefit from that, not once every 2 years, and it's architecturally compatible. And so the software you developed yesterday will run tomorrow. The software you developed today will run across your entire installed base, so we can run incredibly fast. If every single architecture was different, then you can't do this. It takes a year just to cobble together a system.
Yep.
Because we built everything together, the day we ship it to you, and it's pretty famous, somebody tweeted out that in 19 days after we shipped the systems to them, they had a supercluster up and running. 19 days. You can't do that if you were cobbling together all these different chips and writing the software. You'll be lucky if you could do it in a year. Yeah. So I think our ability to transfer our innovation pace to customers, getting more revenues, getting better gross margins, that's a fantastic thing.
The majority of your supply chain partners operate out of Asia, particularly Taiwan.
Yeah.
Given what's going on geopolitically, how are you thinking about that as you look forward?
Yeah, the Asia supply chain, as you know, is really, really sprawling and interconnected. People think that when we say GPUs, because a long time ago, when I announced a new chip, a new generation of chips, I would hold up the chip. And so that was a new GPU. NVIDIA's new GPUs are 35,000 parts, weighs 80 pounds, consumes 10,000 amps. When you rack it up, it weighs 3,000 pounds. And so these GPUs are so complex. It's built like electric car, components like an electric car. And so the ecosystem is really diverse and really interconnected in Asia. We try to design diversity and redundancy into every aspect wherever we can. And then the last part of it is to have enough intellectual property in our company. In the event that we have to shift from one fab to another, we have the ability to do it. Maybe the process technology is not as great.
Mm-hmm.
Maybe we won't be able to get the same level of performance or cost, but we will be able to provide the supply. And so I think in the event anything were to happen, we should be able to pick up and fab it somewhere else.
Yeah.
We're fabbing it at TSMC because it's the world's best. Yeah. And it's the world's best not by a small margin. It's the world's best by just incredible margin. And so not only just the long history of working with them, the great chemistry, their agility, the fact that they could scale. Remember NVIDIA last year's revenue had a major hockey stick. That major hockey stick wouldn't have been possible if not for the supply chain responding.
Yeah.
And so the agility of that supply chain, including TSMC, is incredible. And in just less than a year, we've scaled up CoWoS capacity tremendously. And we're going to have to scale it up even more next year and scale up even more the year after that. But nonetheless, the agility and their capability to respond to our needs is just incredible. And so what we use them because they're great. But if necessary, of course, we can always bring up others.
Yeah. Company's incredibly well positioned. A lot of great stuff we've talked about. What do you worry about?
Our company works with every AI company in the world today. We're working with every single data center in the world today. I don't know one data center, one cloud service provider, one computer maker we're not working with. And so what comes with that is an enormous responsibility. And we have a lot of people on our shoulders and everybody's counting on us. And, demand is so great that delivery of our components and our technology and our infrastructure and software is really emotional for people because it directly affects their revenues. It directly affects their competitiveness. And so we probably have more emotional customers today and deservedly so. And if we could fulfill everybody's needs, then the emotion would go away. But it's very emotional. It's really tense. We've got a lot of responsibility on our shoulder, and we're trying to do the best we can. And here we are ramping Blackwell, and it's in full production. We'll ship in Q4 and start scaling in Q4 and into next year. And the demand on it is so great. And everybody wants to be first, and everybody wants to be most, and everybody wants to be, and so the intensity is really, really quite extraordinary, And so I think it's fun to be inventing the next computer era. It's fun to see all these amazing applications being created. It's incredible to see robots walking around. It's incredible to have these digital agents coming together as a team, solving problems in your computer. It's amazing to see the AIs that we're using to design the chips that will run our AIs. All of that stuff is incredible to see. The part of it that is just really intense is just the world on our shoulders, and so So less sleep is fine, and 3 solid hours. That's all we need.
Well, good for you. I need more than that. I could spend another half hour. Unfortunately, we've got to stop. Jensen, thank you very much. Thank you for being here and sharing with us.
Thank you. Appreciate it. Thank you.
All right, there you go. That is Jensen Huang. Again, kind of the same stuff we've heard for the past couple of years now in terms of the progress that NVIDIA is making. But it's the thing he said about the end about all of our customers being very emotional because they're tied to so much of the ecosystem. That's how the market has reacted this year. If there's been any news, good or bad, for NVIDIA, the entire market has reacted in a way that said, all right, NVIDIA controls the rest of the market and pretty much all these stocks. So that has to be a hell of a burden on you. Already you have so many burdens as a CEO, but knowing that that other companies' livelihood, meaning those employees at those companies, depend on your execution, that's a lot. That's definitely a lot for one guy to deal with, but Jensen has executed. Last thing we're going to see, guys, Shopify president. I knew he was coming on CNBC today. We got the clip, so let's take a look at what he has to say about the quarter, and then we will end it out for today.
Shopify are now up 19 points. That's 21%. It's because they beat the Q3 revenue estimates. Earnings estimates, they beat everything. And using AI to attract new customers. But really, this may be a renaissance period in terms of just entrepreneurship. So joining us first on CNBC is Harley Finkelstein, Shopify's president. Harley, first of all, congratulations. You did confound people. The last quarter, you told us you were spending out of strength. I believed you. People thought you were spending out of weakness. Completely wrong. How much did it help that you guys have really turned on the jets here?
Yeah, I mean, I think what you're seeing, Jim, is that we continue to deliver some of the strongest results in the industry quarter after quarter. If you look at our sort of key metrics, GMV, which is, of course, the sales by our merchants, a proxy for how merchants are doing, was up 24% to 69.
Wait, is this still at 1.25? This guy's talking fast. Hold on. Do I have the time? Is it at 1.25? He's talking fast, right? Is that just me or? No, it's normal. It's normal right here. Hold on. Playback speed. It's normal, bro. This is normal. He's a fast talker. There you go. All right.
Billion. Our revenue is up 26%, but also gross profit grew 24%. Operating income more than doubled from last year, and free cash flow margin expanded to 19%. So what you're seeing is we're able to deliver both on growth and on margins, and we're gaining shares in a very vast and a very thriving market, and it's working.
Now, I do believe that you have come out with a thesis about what's going on right now that I just love. The cost, you have lowered the cost of failure rather dramatically. So people who can take side hustles, make into the real deal. The passionate people are able to take your site and go soup to nuts. It's working.
That's right. And what you're actually seeing is more merchants are coming to Shopify across verticals, industries, geographies, and size. So while we're the place to start a small business, someone that has an idea in the shower, decides to get it started, we are the default place to do so. At the same place, we're seeing companies like Reebok, Off-White, Hanes, On Running, Victoria's Secret, also come to Shopify. And ultimately, the key to this is making it really easy to get started. And as you scale, you have everything you need to future-proof your business. When you think about the scale we have now with millions of stores on the platform doing $69 billion, we're also able to supplement that with incredible merchant solutions, whether it's payments or it's capital or our financial services. And so we're effectively creating this unified retail operating system. And it's working really well.
Let's talk about the finance. On October 29th, just literally 14
Bro, I don't talk this fast. This is different, bro. This is like this. There's no way I talk this fast. This is like it's coffee or blow or something that he's on, but he's talking fast.
days ago, you announced Shopify Finance, which I thought was brilliant. Are people already taking up on that one?
It's really cool. I mean, one of the things that we think is important about finances is making it really easy. So it's a new, intuitive, unified home for all our financial solutions, and it's built right into the admin. So whether it's access to balance or credit or capital or bill pay or tax, it's one place you can go to get everything you need. Now, this is similar to what we're doing with AI, for example. We're trying to make sure that merchants on Shopify have an unfair advantage so that if it's things like product photography, AI makes that better. If it's responding to emails from customers, AI makes that better. So rather than looking at AI as one single part of Shopify, it's embedded across all of Shopify. And we take that same approach to all of our tools, which is why people come to our platform and they never leave.
All right, so let's talk about a recent slide that was in a Salesforce document, a deck, so to speak, about why customers trust Commerce Cloud. They're talking about how they have won business from you, Hasbro, Black Rifle, Reserve Bar, Pokemon, Solo Store. How do you respond to a Mark Benioff saying, listen, we think that these guys are terrific, but we are winning share?
Yeah, I mean, we're not seeing that. We're seeing the opposite. We see on a consistent basis, some of the largest brands are coming onto Shopify. You know, this quarter alone, 16 enterprise brands launched on Shopify. So yeah, we love our roster of homegrown stories: Gymshark, Viore, Mattel. But we also like the fact that MeUndies and Vera Bradley and these much larger brands are coming to us also. Look, we're not trying to do everything to everyone. We do one thing and we do it better than anyone, which is commerce, retail. And what we're seeing is that what these big brands are looking for is one place to sell, not just online, but also offline across social media on places like YouTube. We announced a partnership with Roblox, where now Shopify is powering commerce there as well. This idea of creating a unified operating system for all of commerce is the reason why these big brands love us.
I think one of the reasons why your stock can go up so much is people still don't understand what you do. And that's because, as you say, and Toby says in the great video about how we're not trying to be your company. We're trying to be behind your company, which is a level of modesty that I greatly appreciate. For instance, if you wanted to start a product and need to be distributed, you guys have a relationship with Flexport, making it so that basically we take the taxes out, you ship, you don't have to worry about your warehouse, you handle everything. I don't think people understand the complexity of what you're offering because it seems so simple.
Think about this. If you were to pretend that Shopify was a single retailer, you aggregate all our stores, let's just say in the US alone, we'd be the second largest online retailer in America. Now, why does that matter? It matters because when we negotiate rates for things like shipping or payments, we are negotiating as if we're the second largest retailer. And instead of keeping those economies of scale for ourselves, we're able to disseminate them and distribute them to everyone that uses Shopify. That is how you bend the curve. That is how you level the playing field so that everyone can be successful faster. And that's something that is unique to Shopify.
Well, I've got to tell you, I like to refer to the fact that your stock was getting killed when you're on last. You said, look, it's really a great opportunity. The people who were negative, they were dead wrong, Harley. I hope they were shorted, and now they have to figure out what to do because I know what to do. Go buy your stock. Thank you, Harley Finkelstein, for coming on.
Thank you, Jim. Thanks as always.
Bro, I don't talk that fast. You guys are wilding, bro. I don't talk that fast. That was different. Like, it's like he would ask a question and then just boom, like, I was like, is that? I had to really check. Is that on 1.5 or something? But overall, no, dude. Shopify incredible, up 25%. Again, revenue 2.16 billion, GMV 69 billion, Q4 revenue guidance of 20% growth. Black Friday, Cyber Monday's coming up. As he said right there, Victoria's Secret, Nike, all these companies are integrated on Shopify's platform. And again, their business model is really simple: $30 a month. And then 2.9% off every sale. I'm sure for the bigger brands, they have like special deals with them and there's different percentages. But you start a Shopify store, $30 a month, they're going to get no matter what. That's juicy subscription revenue, about $180 million per month in that revenue, in monthly recurring. And then 2.9% off every knickknack that you sell, whether it's $10 or $100, Shopify gets about 3% of that. So it's a pretty sticky business model if they get people integrated into the ecosystem. And it looks like that ecosystem is not slowing down at all, which is pretty good for Shopify. Vibop says, Amit talks faster than my girlfriend when she's really hyped about something. Dude, I'm not saying I don't talk fast, but like that was different fast. That was a different fast. Tess says, I recently took the year off living a mini retired life. I love watching the show. LOL. Thank you for doing this. Tess, thank you for being here. Thank you guys every morning for being here as well and opening the market with me. You know, one of the reasons I talk fast, it's because I did debate in high school, and in debate, you have to talk really, really fast. One day I'll show you guys me speaking in debate. Dude, you guys will be like, you think this is fast. I have to speak 500 words a minute, and I'm not joking. It was called spreading. So it's called speed reading, spreading. And in debate, to be hyper competitive, especially on the national circuit, you have to spread. You have to speed read. You have to read very quickly. And so that's where I kind of learned how to talk fast. But also, I'm always so worried that people aren't getting value. And like, you know, when you're watching someone and they're like taking their sweet time trying to say something, it's like, all right, like get on with it. Like it's always in the back of my head. Like, all right, I gotta keep going. Now I end up yapping so much about so many different things. I feel like people still might feel like that sometimes, but at least we're transitioning through multiple topics because there's so much yapping, but the speed of the yapping is so quick that the trajectory of the show hopefully is in a upwards movement as we continue to move from topic to topic. That is the goal of what we're doing. I knew you guys would say something about spreading, dude. I knew you guys would say some jokes about it, but that's a real thing. It's called speed reading. If you look it up in debate, speed reading is spreading. That's what people do. All right, that's it for me. 3:45. We'll be back. We have a lot of earnings after the bell, folks. So we have Spotify, we have Rocket Lab, we have Oxy, we have SoundHound, we have Marathon, we have Kava, we have Instacart, we have Rumble, ZoomInfo, Wolf, and then Honest Company. So about 8 companies today, big earnings, probably around 4:30 after those earnings. We will have Jason come on and do Technical Tuesday. And he wasn't on last week, so this is going to be a long episode. So this is probably going to be a 3.5 hour market close with all the earnings and then going through all the technicals for stocks that have re-rated themselves post-Trump's election. All right, that's it. I'm going to go drive in the Tessie, the Miracle Whip, the Cartmobile, the Batmobile, whatever we got to call it. I'm getting in that damn car and I'm driving for the next 10 minutes. And then I'll be back because I got to get in there again. I got to drive. Thank you, everybody. I'll be back 3:45 p.m. See you guys in a few hours. Bye, everyone. Have a good one.